This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. We welcome all of you across the nation on your commute, on YouTube, from your living room, from your office. Subscribe to Bloomberg Podcasts. We're here. Paul's back after a very successful Bloomberg Invest.
It was.
Well, give us a nugget of a conversation.
I mean, Robert Rubin, the former Treasury Secretary, former senior partner at Goldman Sachs, just talking about some of the economic policies coming out of Washington and some of the concerns he has. He was just one of many, Tom, really smart people giving their time to Bloomberg clients, and it was a great conference.
I'm so glad you mentioned the former Secretary of the Treasury, of course, iconic at Goldman Sachs. And within the game, folks, what Secretary Rubin is famous for is one word: likelihood. Every conversation back in the day, he would frame out, what is our likelihood? What is our probability? And you say, well, big deal. It's not anything in 2025. It was revolutionary back then. We have some revolutionary discussions today in the politics of Washington. What's going on in Germany, a huge policy shift in Europe, and of course an ECB meeting, which will be unusual this morning, to say the least. Bloomberg Surveillance was brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support in technology. We thank Commonwealth for their leadership here, particularly in covering our economic data. They've been out front on that, really supportive. 4 years into the jobs report tomorrow.
Sure, absolutely. We'll
Small
keep
detail.
Yep.
Claims today.
Exactly. We'll be on top of the Go, Tom.
The news flow extraordinary. Henrietta Treyz will be with us on her Capitol Hill. From the Interactive Broker Studios of Bloomberg Business Flash, Lisa Mateo.
And we got futures pointing to a lower open. You have NASDAQ futures down more than 1%. S&P futures down nearly 1%. Dow futures down 0.7%. This is as higher global bond yields, trade war fears, disappointing tech earnings, all affecting the markets. Let's start with the global bond sell-off. It's on the rise. Investors demanding more to buy debt after Germany's plan to step up spending. EU leaders actually holding an emergency summit today in Brussels to talk about the war in Ukraine and defense. So in the U.S., let's start there. Right now, the 10-year up about 3 basis points, 4.31%. Want to point out Germany right now. It's up about 6 basis points. We move down to Japan, up about 10 basis points. Just a quick note, Germany had a 30 basis point jump yesterday. Now we get to the tariffs. Okay, so auto stocks giving back some of yesterday's gains. The White House delayed those levies on them for 1 month. So, for example, Ford, General Motors, Stellantis, all down 1%. Finally, we move to tech earnings. Shares of Marvell Technology off 15%. Its growth forecast, that fell short of the highest estimates. The mood actually pulling down shares of NVIDIA lower, down about 2%. Macy's coming out with earnings. I am out of time, but its shares right now are up about 4%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Dan Ives to be with us here in a number of minutes, but first, Steve Chiavarone with us with Federated Hermes. Thrilled he could be with us. You were just out in San Diego, Steve, talking to people trying to make decisions on asset allocation. How miserable are people?
Worried. I think you've got, and frankly, I don't mean to be callous about it, but it makes me like the market set up better today. Ironic, given the news flow we just heard, than where we were last November. The expectation set last November was unfulfillable. Whereas today, we've got a healthy wall of worry around resurgent inflation, hawkish Fed, tariffs, policy. And I think that wall of worry is going to get knocked down or taken down brick by brick as we get in the second half of the year. So more pain to come. But we see a much, much better second half.
Torsten Slack moments ago with Apollo just put out the states affected by tariffs. It's the usual victims, Michigan, Texas. I featured Nebraska yesterday, Indiana, Kentucky. Is Mag 7, Steve Chiavarone, is the technology excellence of growthy Federated Hermes, is it affected by tariffs?
It's not necessarily affected by tariffs in an extraordinary way. I mean, there is certainly some effects as it relates to chips and things of that nature. But if you think about it, if you were going to retaliate against the United States, you really can't do it in a general economic sense, right? If you're Canada or Mexico, where exports represent 25 or a third of your GDP, and for the US, those imports may be 3 or 4%, you're not winning that battle. Your only leverage, if you are a foreign country trying to retaliate against the United States, is to try to go after the Mag 7, where 50% of the revenue for some of those names are overseas. And so I think they are the obvious retaliation target if we're going to go down that route.
Steve, what are we doing with asset allocation these days? We sit back and we had such outperformance by the equity markets in 23 and 24. What are we doing with asset allocation these days?
Yeah, look, I think what we're in is a fog of uncertainty, which is what we're calling it. And it's an economic slowdown in this first part of the year. However, I think inflation concerns are overblown, particularly because the risks to growth, I think, are greater than the risks to inflation. I really don't care what Chairman Powell has to say. This Fed is cutting, and I think they may be cutting by the middle of the year. I think tariffs, for all of the concern, Paul, are going to end up essentially with the United States instituting a tariff level equal to the world's VATs. I think trade barriers are going to come down with reciprocal tariffs, and you're going to see U.S. barriers get up to about the level of a VAT. That's not the end of the world. You're going to get a tax cut package somewhere between Memorial Day and the 4th of July. And I think in the back half of the year, you're going to see cyclicals, small caps, and the short end of the yield curve rally. I'm not smart enough, clever enough, or quick enough to try to get defensive today and get bullish tomorrow. We're going to invest for that better second half.
Steve Chiavarone, one final question here. I think it's really, really important. The conservative client, they got a retirement plan. They're like Sweeney. It's a 501k. The thing's on steroids. Do they do something here? I got to do something. The news flow, I can't take it. Lisa Mateo gave me my first gray hair. What do I do? I mean, what's the to-do list for you and Federated here?
I think for a conservative client, one of the best things you can do is put together a portfolio that generates income. In my household, once a quarter, we get our dividend payment on stock that we have, and we call it dividend day. It's one of the happiest days of the year for my wife, 4 times a year, because that money comes in, and we're not worried about a share price, right? We're not worried about a stock being up or down. We know that the investments that we hold generate an income. And I think for clients that are conservative or tend to get skittish, having a portfolio that produces income that helps you to stay calm, because you know that check is coming in, and not overreact to share price movements, helps you stay invested, helps you stay long, and helps you not overreact to some of the noise that you're seeing in the political news flow right now. And I think that's the best thing you can do. You don't want to overreact.
Okay, Steve Chiavarone, thank you so much for the guidance there. And folks, this is a huge issue. We'll be covering this, of course, really into March. We've got the jobs report coming up, Paul, but I'm sorry, asset allocation, what do we do?
Yeah. Some
people are saying do nothing.
Yeah.
We'll have to see. The problem I have, folks, for those of you on radio, there's no way to describe it. How many people we had that are world-class analysts that come in with a little strange duck hat.
Yeah, I know.
You don't expect it. Maybe I expect that from Lisa Mateo. Dan Ives joins us now, styling back from Singapore. What'd you learn in the Pacific Rim?
Look, I think there's definitely nervousness in terms of tariffs and what that's going to mean. But I actually believe it's really about demand. Demand is more robust when it comes to chips, AI revolution, NVIDIA, than it was 4 months ago.
Does Wedbush model out a 5% China GDP, as President Xi talked about? Does that diffuse across the Pacific Rim?
Look, I think ultimately a stronger China, more stimulus, is more bullish for Apple. It's more bullish for Tesla in terms of everything we see in China. It's just how important those markets are.
Paul, Apple or Tesla first? You make the call.
I'll go Tesla. Tesla's sales fall 76% in Germany amid Musk electioneering. That's the Bloomberg headline. We've seen that in other markets as well. As an analyst who's followed this company from day one and you model out demand, how frustrating is it for you to see some of these sales numbers and you're like, we really don't need to see those kinds of sales numbers? What's he doing?
Look, well, first off, 70% of it is actually really more refreshes inventory year-over-year comp. So the numbers sound scary, white knuckle, but the reality is probably about 10 to 15% of what's going on is what I'll call Musk brand deterioration, DOGE relate. But no doubt, look, we just continue to view it as the bet for the ages for Musk is on Trump. Deregulatory, autonomous, that continues to be, that's the goal. That's, I think, worth $1 trillion.
Have we gotten the market away from making cars? So is it about AI? Is it about autonomous? Is it about robot? Has he been successful in shifting the focus away from making cars?
Look, I think 90% of the value of Tesla going forward is Optimus autonomous rather than actual vehicle.
Really? Wow.
Is there evidence that's a revenue and profit reality for them, or is that technology and innovation?
It's a great question.
Talk.
It's a great look. FSD today, 15% of Teslas, in terms of owners, have full self-driving. That gets to 50% numbers.
Is there evidence it will get to 50%?
And I believe
I got people, Dan Ives, in New York canceling Ubers that are Teslas. They don't want to drive in Elon Musk's car. There's people putting black on the label. Germany, as Paul mentions, Europe rather, it's fallen off a cliff. Do you see a management away from a distracted Musk going, let's fix this, or does it fester?
I think as wild in the near term, I think it's contained. In other words, we're talking, call it low single digit as a contained issue. Look, is it a risk, especially given what we're seeing in terms of some of the worries in Europe and especially in the U.S.? But it all comes down to they are going to own the autonomous race in the U.S. and I believe ultimately globally. And for Musk, when you view even some of the brand worries and deteriorations, I view it almost as near-term noise relative to the longer-term sort of value in the story.
How about just in terms of time spent? Part of the bullish case for Tesla over the years was it's a bet on Elon Musk, and that is a great bet to make. I don't know what the number is, but it feels like 50, 60, 70, 80% of his time and effort is down in Washington. So does that in and of itself take away from the Tesla story?
Look, perception's reality, right? So I think that is also playing into what's happening in the stock because the view is like he's not dialed in Tesla, he's just focused in DC. But I do believe that that's not true. I do believe he's...
Okay, I got 400 back to 273. I got a trading range off COVID that's banded between 200 and 300 to be polite. Do you have is there a Dan Ives price where you pull the cord?
I mean, this thing... At these levels, and it get into the mid 200s,
right?
I believe it is generational in terms of this type of sell-off where I ultimately see Tesla over the coming year. I think Tesla's going to be a $2 trillion market cap.
Okay.
Interesting.
Okay. Got to switch to Apple. I got 2 new toys out. Granted, iPad did better than they thought, I think. Computers, Macs did better. I actually looked at the M3 Ultra today. Away from the idiot iPhone frenzy, which I think everybody understands. It's a monthly plan, folks. You pay for how many cell phones are you paying for right now? Lisa, how many cell phones are you paying for right now?
Don't get me started.
It's bigger than the mortgage payment.
Yes,
I mean, it's a racket. It's the Ives Wedbush racket. Away from the racket, where does computers fit in for Apple?
I mean, that's going to be a big part of the refresh that happens.
It's a refresh.
It's a huge refresh.
Every brat has to have one. Look, did I editorialize there? I'm sorry, Lisa.
And even Sweeney, in between the 9th and 10th hole, he's going to ultimately have that new sort of Apple Mac. So look, I just think it comes down to Apple. Also, if you notice, this stock is holding in like a champ because I think investors are realizing more and more that they're going to benefit on this consumer piece and when it comes to AI.
Thank you for listening on YouTube. This is great. Some guy emailed, said, Tom, here's how bad it is. I'm paying for my ex-wife's iPhone. I mean, that's insane. I mean, it's part of divorce agreements. You've been right on this. Apple's not at record highs, all-time highs, but I'm sorry, it's been resilient and it keeps coming back, 230, 240. What's your sum of the parts price target right now?
325 base, 375 bull
Why
case.
do so many people disagree with you? How much? Hey, I mean, first of all, you're dressed like an idiot today. Other than that, I mean, come on, look at us here. Hermes. He looks like he's out of Central Casting. He could be on Lake Como having a cocktail.
Exactly. Look, and that's why it's your world. We all pay rent, and exactly. I mean, look, Tom. My view is you have to ultimately look at the consumer AI revolution. 25% of the world is going to access AI through an Apple device. And if you look at the upgrade cycle, especially once Baba gets announced as a partner in China,
that's Alibaba.
That's going to be key to ultimately growth for Apple. And that's why this continues to be a name. Haters hate. They'll miss, I believe, the next leg in Apple.
So, Dan, you were just in Asia doing your channel checks, checking everything out. Talk to us about what's the latest thinking, your latest thinking on Apple and China risk, just broadly defined.
I believe that risk is significantly scaled down versus where it was 5-6 months ago. I think there's a view that they're going to play nice in the sandbox. Remember, it goes back to Cook, 10% politician, 90% CEO. When you think about the $500 billion AI investment in the U.S. for Trump, that's basically a Hallmark card being like, hey, when tariffs come, don't forget about me. That's going to be excluded, right? And that's why the reality is that I think with Baba and again, China, 20% of iPhones are ultimately in China, that come from China in terms from a demand perspective.
All right. So, I mean, is this still something what is the next catalyst for Apple, do you think?
I think it's the Alibaba deal. I think that's something that's going to be very important because ultimately right now the missing piece is the China piece in terms of growth.
And Alibaba stock is up 60% this year.
Well, that continues to be the China AI play.
What part of Apple is cool now, like little strange duck hats that have the Kablamo camo collection in Dan Ives lavender with a mallard flying? Folks on radio, I'm sorry. You're lucky on radio. You're not watching this. What part of Apple is cool now?
I think the part of Apple that's cool is ultimately going to be that they are going to be the platform for every AI app that comes out. It's going to come through Apple. That's why DeepSeek, whether it's China, US, Australia, it all is going to come through Apple.
Right.
They are going to be the facilitator of that. And I just keep coming back to when it comes to Vision Pro, a year or two from now, they're going to be glasses.
Oh, come on. You're kidding me.
Look, we will be in here wearing sunglasses.
You're out of your mind. Lisa, could you get up close? I mean, Lisa, what do you got your interview outfit on? Is there something you'd like to tell us, Lisa? Lisa, get up close to Ives and get a shot. The colors will probably break the lenses on your iPhone. Dan Ives, seriously, there's questions that they've missed the boat on AI. Isn't that what they want to do? They don't want to be spending money like all the others?
You could lose first, second, third round when you have 1.5 billion iPhones, 2.4 billion iOS devices. You win rounds 4 through 12. You win the match. In other words, it's all about the install base. And that's the thing when you talk about what Street misses, they'll get into, this week, the numbers in terms of iPhone, this is it, it's over. It's all about the install base. It's what they missed on Meta. It's what they've missed on Tesla, what they continue to miss on big tech. And that's why in terms of tariffs, it's all a game of high-stakes poker. We're at the Bellagio in Vegas. If you think this is really happening, you got to go 4D poker. What's the fourth, fifth derivative? And that's why I view Apple. These are the times to own these names, not run for the hills.
Real quick, just 30 seconds. Microsoft has been really underperforming for 12-plus months here. What's happening with Microsoft?
Because there's a view that, other source of funds, you could play Alphabet, you could play Amazon. That, I believe, in large cap tech, it's the biggest table pounder. I believe I'll call it, let's say, $100 upside, 15 to 20 downside. That's what because the enterprise they will own in terms of Nadella and AI.
Paul, the Gorin brothers, Goorin, it says since 1895. This sounds like Dan Ives' securities analysis. We're a family of hat makers and dream makers with a legacy built on unconventional Dan Ives ideas and foolish Dan Ives pursuits. Nailed it.
Yep.
Fits perfectly. Where are you traveling to next?
Just domestic over the next few weeks. And
Penn State update. Come on, March Madness.
Oh, I mean, look, obviously, Big Ten, but Penn State won't be a participant in March Madness. But it continues to be 2025, it will be the hat trick. You had Michigan winning Natty, Ohio State, 25, it's Penn State, 3 in a row.
I like that.
Big Ten at the top of the mountain.
They got the quarterback coming back.
Oh, Big Ten, Penn State, top of the mountain. This is our year.
Yeah, well, the best part about Penn State is when you're doing something, you've been a huge alumnus for them. But the best part about it is you wear white when you're dealing with Penn State.
Yeah.
So the rods and cones aren't hurting my eyes.
Exactly. The whiteout. That's
it's great.
That's where you get.
Dan Ives, thank you there. You heard it, folks, on Apple up, Microsoft up $100. You heard it here first. Mr. Ives, leading technology at Wedbush. Right or wrong, you must listen. Right now in the markets, a deterioration in the tape, negative 62 on SPX. That's down 1.1%. NASDAQ down further, 1.3%. The VIX, it's out more than a stick, 23.59. I'm going to call it contained even within the angst. BitDog near 91,000. I really want to make clear on the German hysteria, and we're going to have one or two great conversations on this. This is a policy revolution that you're seeing within their fixed income market. For example, Germany, Italy spreads have not really widened out. It's much more about a death of austerity in Europe than it is worrying about this bank or that bank. I want to make that clear this morning. It is ECB here coming up with Lagarde's press conference on the Jobs Day tomorrow. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures under pressure. NASDAQ, S&P futures down more than 1%. Dow futures down nearly 1%. We go to the two-year yield, 3.99%, down 1 basis point. The yield on the 10-year, that's 4.31%, and that's up 2 basis points. Tech stocks, though, a big part of the problem today, particularly affected by disappointing earnings, Chinese innovation, and artificial intelligence. So we talked about Marvell, their earnings. It has shares down about 16%. Now we get to Chinese innovation. Shows shares of Alibaba on the rise, up 8% in Hong Kong. ADRs up 2%. It unveiled an AI model that it says performs just as good as DeepSeek with less data required. And then you have Alibaba's rival, JD.com. It said its profit nearly tripled last quarter. Its revenue topped estimates, up 8% in Hong Kong. Its ADRs up 6%. We go to the Bloomberg Dollar Spot Index. Haven't mentioned that yet. It is little changed. As far as earnings, I promised to you, here we go. Macy's gave a more downbeat outlook for sales and profit this year than expected. Its shares are off about 2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Wendy Schiller with us now for a 4-hour conversation. We're going to cut into both of her courses today. She's at Brown University, always informative, always controversial in this political maelstrom that we live. What I witnessed yesterday, Professor Schiller, is what I've witnessed for my entire life, including parents a million years ago describing FDR, Earl Warren, John Marshall Harlan, William Brennan. It was like from a time and place where presidents pick a judge. Oops, they didn't do what the president thought they'd do. Is that what's out front for President Trump? Are many of these appointees he made aren't playing by the script?
Well, that's a really good question. I think I'm always watching Amy Coney Barrett, and she's been very interesting. As you know, she was sort of the last Trump appointee, and she has been positioning herself for at least 6-8 months now, even longer, to sort of say, well, maybe this Alito Thomas super strict constructionist interpretation of everything is not viable. And it's not viable for the future of the court.
Right.
You know, you can't be that out of step with public opinion and survive. It's also, I think they're facing an existential threat from Donald Trump, who we don't know if they will be, listened to, heeded by the president, or the president will find a way around the court. Other presidents have tried to find a way around the court too. So, and remember, Congress can work with the president to pass new laws to get around the court. It's not as if they don't have tools to sort of undo a court decision. Right. But right now, they're on the losing end. They won one decision from the Supreme Court, but there's two other ones that you could argue are losses. And we'll just have to see how he reacts to that.
Wendy, I'm halfway through Scorpions, Noah Feldman of Harvard's fabulous book on the FDR court. And the basic idea here, I think, for simple people like me, is what the court's screaming is to the legislative branch, do what your responsibilities are. Is that what happened yesterday? And is that what we're going to see in the future? Is basically our justice system saying, Congress, grow up?
Yes, and Tom, we certainly heard that from the court on immigration for more than 10 years, going back to Obama, certainly in terms, DACA 2, immigration work, just get a bill passed. You don't have any, you have old laws, you have an old infrastructure, it doesn't meet the times, we can't fix that for you, get it passed, do something. And I think that's the admonition from the Roberts Court in particular, except when the Roberts Court makes a decision like Shelby v. Holder in 2013 on voting rights, and then the court's like, no, don't do anything. So the court doesn't always send consistent messaging, but certainly now, for the separation of powers, I think it's essential for all of us to be asking Congress to say, what is it you want to see in terms of policy implementation? The Republicans may say, this is what we want to see. We support the president. This is what we want to happen. But not doing anything and ceding increasing power to an executive branch that now looks to be limitless, boundless in terms of what it wants to do in terms of power is not what the framers intended.
Wendy, where are the Democrats? Since the election, President Trump has seemingly taken up all of the oxygen in the room. Are you surprised that there hasn't been more of a Democratic Party presence, voice? Where are they?
Well, Paul, there are two challenges for the Democrat Party. One is internal. Who is that voice? Is it Hakeem Jeffries? Is it Chuck Schumer? Who is it? They had a voice. They had Biden, then they had Kamala Harris, and the party seemed to be quite unified by the end, towards November, in terms of the support for Kamala Harris. But that messaging didn't work. That candidate didn't work. So in the midst of trying to find the new voice, I think they're stuck. They can't sort of anoint anybody because they really don't know what voice will win. Alyssa Slotkin gave the address. Maybe it's somebody from Michigan. We don't know yet, but they don't have anybody to be that voice. Second, I think the deeper problem is that the American voter hasn't felt the impact of a lot of what Trump's doing right now. We see the tariffs are on one day, then they're, pulled back. So the auto workers are okay for another month. It's very chaotic, but most Americans haven't felt it yet. You cut 80,000 jobs from the VA, people are going to feel that. They're going to see that. And then the Democrats will have something to scream about. But right now, there isn't anything they can hang their hat on that voters will respond to in a way that really has damaged or limited voters' lives. They're waiting for that, the economy, the debt ceiling, the budget, the shutdown, but they don't have it yet.
Elon Musk met recently behind closed doors with congressional Republicans on the DOGE cuts. Where are we in terms of Elon Musk, the whole DOGE movement, and Congress?
Well, Elon Musk, a private business person, very successful, has run into the bureaucratic system, the federal government. There are protections for workers, not probationary. Those people don't have the same kind of protections. And that's who the Trump administration cut first. But if you're trying to fire somebody who's a civil servant, who's protected by the Pension Act, that's going to take a lot of work. And so I think they're trying to find other pockets of employees that might be more vulnerable and easier to fire, to be blunt about that. DOGE has no congressional authority. I just want to repeat that. There isn't really a department that Congress has created. And I think down the line, that's going to cause more difficulties and obstacles for the Trump administration in trying to fire many more people who do have the kinds of protections by law that the probationary workers haven't had.
Wendy Schiller with Brown University. We continue. We welcome all of you on your commute across America, particularly good morning on Sirius XM Channel 121 in Washington, 99.1 FM, the land of Ovechkin. He scored again.
Yep.
He's on a march.
Yes, he is.
They're having a better year. Good morning, 92.9 Boston Bruins. I don't think they can trade Marchand. Come on.
It's all about the Celtics.
It's like trading Ted Williams. It's not going to work. Wendy Schiller with us here from Brown University. Okay, there's the 14th edition of the Contemporary Congress coming out, Wendy. We just talked about 80,000 bodies at the VA. Full disclosure, folks, I'm like everybody else. They're government employees. They're lazy, no goods, da-da-da-da-da-da-da. Except the reality is a lot of them actually do things and work very hard and get it done. Cut it by 90%. Wendy, if we lay off 8,000 people at the VA, what happens?
Well, people have appointments for elective surgeries. That's going to get pushed back. People who wait times to see people, trying to get an appointment, getting a response from anybody, mental health services, all will be curtailed, and everybody will feel that because we all have veterans in our communities and people who are just are veterans themselves. We saw that in town halls in Georgia. You know, someone said, listen, I'm a Republican, I'm a veteran, but I don't want you to cut the veterans. So I think this is what the Democrats are waiting for. But it hasn't hit yet. That was a float trial balloon. Either somebody leaked it because they're worried about the cuts.
A trial balloon? What is this? Come on. Every day there's 4 trial balloons. Have any of the balloons not popped yet? Let's take a 1 month.
This one, I can't see the Republicans in Congress staying silent over 80,000 veterans administration employees being fired. I mean, I just can't see that happening. That's extreme. But, you have the FAA, you have the EPA, you have the things that we worry about: clean water, clean air, safety in the skies. These are things that people care about.
Okay, you're talking to the endowment at Brown University. I got one final question here. It's all trial balloons. It's all red meat for Mr. Trump's supporters. I get that. Is investor Schiller telling us to just ignore this noise and look over the Brown University horizon?
No, don't ignore it. Understand that if you're looking for a trigger for members of Congress, even in the Republican Party, to stand up and say, stop, don't do this, the veterans would be the first place to look. Social Security is the second place to look. They've been very strategic to, fire temporary employees in areas that they don't think will hit. They just got the court order said you have to hire agriculture workers back because we want food safety, not because we want food safety, because legally they're entitled to go back to their jobs. So this is where these stumbling blocks for Elon Musk will get larger and more firm and more difficult to get around. But if you're looking for reaction either from the Republicans or the Democrats to, get some balance of power, it has to be an issue that hits at the core of what Americans care about, and that's what we're waiting for. So don't ignore it, but watch for how far Trump will go to get sort of a big backlash response.
Professor, thank you. Professor Schiller, Wendy Schiller with us at Brown University. We have claims here in 50 minutes. Key labor data onto the jobs report tomorrow. Futures negative 65 down, futures negative 400. Ooh. 400. Stay with us. The VIX 23. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And And this Bloomberg Business Flash brought to you by IBKR. Will the year-over-year change in U.S. PPI exceed 3% in February 2025? At IBKR Forecast Trader, the yes recently at 39%. What's your take? You can trade your prediction at ibkr.com/forecast. Well, we've got tech stocks really putting pressure on the markets. Marvell Technology among the biggest pre-market losers, down about 17%. You add to that disappointing forecast from database software company MongoDB. It's off about 18%. So we have NASDAQ futures down nearly 1.5%. S&P futures down more than 1%. Dow futures down nearly 1%. We go to the 2-year yield, 3.96%. That's down 4 basis points. The yield on the 10-year, 4.29%. That's up 1 basis point. To commodities, oil edging higher, gold declining, and we have the Bloomberg Dollar Spot Index, little change. Shares of Victoria's Secret, they're off about 3%. It forecasts adjusted operating income for the first quarter, missed estimates. Then we go to BJ's Wholesale, forecast adjusted earnings per share for the full year. That was in line with estimates. Its shares are up nearly 2%. After the close, we move on to Costco, Gap, Broadcom, and HPE. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Let's get right to it. Head of all of our economics with a busy 48 hours ahead of him, Michael McKee here. Ages ago, 1966, an outfit in Chicago, Challenger, Gray, and Christmas, started figuring out layoffs across the country. There was, Mike, you're too young for this. There was a point where Challenger, Gray, and Christmas was gospel. The number came out and the known world like M1, M2, M3 hung on it. And then it drifted away. They've got a bombshell today about layoffs back to 2009. Do you still care about Chicago's Challenger, Gray, and Christmas?
Well, I'll give you a nuanced answer to that because I don't want to put them down. It is not considered a top-tier indicator basically because the company collates job cut announcements, and that's for American companies, but they're worldwide staff. So it doesn't necessarily mean job cuts in the U.S. And then many over a period of time don't happen. Either their jobs are not filled through attrition or people are moved to other parts of the company. So it's not an absolute number. It's not a data point, as it were. However, it's something you can compare month to month. And this month is going to get people's attention. 172,000 job cuts, 122,000 more than we had last month in January. And it's driven, Challenger, Gray, and Christmas says, by DOGE and fear of job cuts in the government, trade wars, and bankruptcies also figuring into it.
The Sweeney yield comes in 3 basis points. That's enough to know price up, yield down.
So how do we think about this? At the very least, Mike, it feeds into, I think, a narrative that's out in the marketplace, which is, you know, some of these tariff discussions, immigration discussions, DOGE discussions lead to an argument of slower growth, maybe higher inflation. Is this kind of playing to that narrative?
That's playing to the narrative, and that's why I think this gets a little bit of attention today. I mean, we don't usually do the Challenger numbers on the air here, but you got 62,000 job cuts listed as government officials. And then you've got things like consumer products, technology, education. We have the NIH cuts. So people who are concerned about these sort of things, this is maybe the first cloud on the horizon. It probably won't show up tomorrow in the jobs numbers, basically because of the timing of when they survey for jobs, beginning of February as opposed to the end. But it does set us up for interesting March numbers.
One final question. Audrey Child-Friedman asked me to ask you this. What's the whisper number?
We could look at the whisper number. I think people are going to hold off until after we get today's data. But right now we're looking at 120,000.
Is a whisper.
And that was 140,000 about 24 hours ago. So there is some concern.
Go away. Germany's more important. Michael McKee, thank
Germany
you so much.
More important.
Driving all of our economic coverage. Speaking of Germany, we speak to Audrey Child-Friedman at Queen Victoria Street. Just really wonderful here. How does Lagarde, Audrey Child-Friedman, adapt at the ECB to what David Folkert's Landau at Deutsche Bank predicted? Austerity at some point will be done. How does it change for the ECB this morning?
I think it doesn't make, good morning, everyone. Good morning, Tony. I don't think it makes any difference for the ECB outcome today with a 25 bips rate cut most likely. However, it is very clear that the fiscal monetary policy mix over the next few years will evolve in a way that we were not expecting, where we are getting a massive increase in fiscal policy from Germany and potentially from other EU members. Remember that so far we've only focused on Germany. And that means that means that there's potential adjustments in growth expectation, in inflation expectation, and therefore in what is required in terms of how much more rate cuts do you need to be seen to do.
Audrey, we're trained in American schools that Europe is irresponsible, socialistic, high government spending, led by the Swedes. And as you and I know, that's all wrong. What we've had is years, decades of austerity. Culturally, are the people of the continent ready for less austerity?
I think these are exceptional circumstances, Tom, and I think no one was really expecting the kind of U-turn from Germany to happen, but it has to be very welcome. And it's not, as I say, it's not just Germany. We have already the EU moving in the right direction, extending loans by 150 billion. And for me, in terms of structural long-term implication about what's going on in the world at the moment, from a European perspective, is does the EU take this opportunity to address the structural problem and go back and talk about joint debt issuance? And that would be, in my opinion, the real game changer in terms of structural implication, as opposed to
Audrey, 30 seconds. We've got the euro at 1.08. Where does that go?
I think near term 110 is very obvious. We'll have to digest a little bit because we've had a big move, but I'm confident it's pushing higher towards 110 and to 110 to 115, and that means it's getting more expensive for Tom to go on holiday.
So again,
did you just see the shade she threw me?
I know. So
did you
Tom,
see the Bloomberg article that Air France, KLM, they see me coming and they're like, yes,
exactly.
Another idiot American. She just called me an idiot American.
Exactly.
I'm done with her. Paul, you take it out.
Audrey, where do you see value out there in currencies here? Because we've got a lot of cross currents going out there. I'm just not sure you long the dollar and kind of go from there. Where do you see value out there?
I think it's all high beta to the euro bullish view. So the Swedish krona, for instance, has been the strongest G10 FX performer over the past few days. So it trades as a high beta to the euro, and it obviously benefits from this substantial increase in fiscal spending, in defense spending that we're going to see in Europe. However, if you want to avoid having a dollar view, Euro Swiss upside is also looking very strong, as well as Euro Loonie upside, because the Canadian economy remains very exposed in the current environment. So if you want to embrace a Euro bullish view, but you want to avoid the dollar because you're not convinced yet that this is a midterm story, there are alternatives.
I mean, this is really what you just heard there, folks. For Global Wall Street's really important. Audrey, I mean, she's up in the food court at Queen Victoria Street.
Yep.
The kids are on their laptops, and she's whispered, and they're doing trades off Euro Swissy.
Exactly.
Off what Audrey's saying. Audrey, I know you don't do trades, but I'm looking at the upside, as you say, weak Swiss francs, stronger euro here. And are you suggesting that those out there gaming it are looking for big figure moves in that huge long-term trend?
I will only embrace that view once I'm very comfortable with what happens in the end on the Ukraine-Russia situation. If there is a relatively comfortable ending for everyone, I think there will be room for more upside on Euro Swiss.
This has been wonderful. Audrey Child-Friedman, thank you so much. Greatly, greatly appreciated. Her coverage on Bloomberg Intelligence, I really can't say enough. It's like Schiffman. I mean, these people are like rock stars, and you have the terminal, and you look it up and see. What she says they're like upside.
Yeah.
I say stronger or weaker to try to make it clear.
Well, look
She's
at
a grizzled pro.
Look at the yen, Tom. I mean, the yen's stronger yet again today. We're sort of down at 147 spot
160 to 147.
Yep, how about that?
In a sea change, I can't remember if you were here. Jordan Rochester was profound about the shift in Japan.
Yep.
Finally, a success of reflation.
Yep, it's been a long time.
I really can't, this is sort of, arcane. Is that the right word? But I mean, Michael Barr's taking notes, so am I. I mean, it's like Euro Swissy Upside. It's a great band. They play the Cavern in Edinburgh. Where are we here? Futures at negative 65, the VIX 23.49. The bond market yields come in, that off the Challenger jobs report.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
The newspapers, the headlines. She reads 20 of them to get ready for this. Lisa Mateo joins us. What do you got this morning?
All right, well, starting with the Wall Street Journal, because it has a look into how more Americans are relying on their 401k as like this rainy day fund. And they're using it to avoid things like big things, foreclosure, to pay medical bills. This was according to Vanguard. So the number is 4.8% of account holders took early withdrawals last year just for those reasons. So it was a record high. But they say why it's happening more is because more employers are automatically enrolling their workers, and some of them, I mean, have little savings to begin with. So now part of their paycheck is going into this other savings, and now they need to use that to help pay for these like other things.
Peter Orszag owns a high ground on this. He and I have argued about it. I'm pretty firm here on there should be no withdrawals. It's a siren call. Everybody does it, and it makes no sense in terms of the actuarial assumption and the failure of our retirement system. What do you think?
But then where do you go?
Yeah, I mean, I don't know. I mean, you have to do 401k because there's no such thing as a pension anymore.
Right.
So all the Sweeney offspring are working. They're putting their max into 401k
That's
and just
good.
having to deal with it.
And the at least folks get the mat, but at least it's a huge deal
for the contribution.
It is,
it's
because
just
people are strapped for cash. And if you want to do something, buy a home, you need something, like you really want to do it, you don't have the money, so where are you going to go? You go where you actually do have it in your retirement?
And people are living longer.
Boston College has great work on this. There's a tip point, 42 years old.
Yeah.
After 42 years old, people are like, oh, I'm getting older. Lisa, you wouldn't understand this. but those under 42 like you are just like, I don't care. I'll take a loan out. Nobody cares. Next.
Okay. This one, I'm biased.
Before I get a gluten-free coffee donut thrown at me.
Yes, thank you. I'm a little biased on this next one. So Dwayne "The Rock" Johnson is back on top as Hollywood's highest paid actor. Okay, get this. 2024, $88 million. This was in Boardroom. If you go on their Instagram page, it's all written down. So why? Okay, he pulled in $50 million from Red One. When I could barely sit
you're
through.
the only one who watched it. East of the Mississippi.
He's a voice actor. It's a voice thing, right?
No, that was a lot. Like, he was actually an actor for that.
Okay.
That was for the Red One.
Okay.
So it was like the biggest fee plus buyout deal streaming history. Okay, so put it there.
All right.
Then we get to Moana 2. I mean, that's where the big money was too. It switched from the TV series theatrical. He got a big cut of the box office as an executive producer, and that doesn't really happen. So that's how it came down to all that
2
money.
Cast $1 billion.
Oh,
in the
yeah.
box office. Who saw that coming?
Most definitely.
He could buy you a Birkin bag.
Yes.
He can buy me like 50.
Next.
And finally, this one, I'm pulling an audible. I'm moving this one up for you, Tom. The CEO of Air France, he sat down with the Financial Times, right? And he said that they are banking on wealthy American tourists who spend on fashion brands, hotels in Paris to help them recover from this tough year, okay? He said they're shifting their business model to focus on this premium end market. So he gave an example. He said some Americans are paying as much as $50,000 a night for the biggest suite of the Bristol Hotel.
Yeah, I'm right there.
You go for if you want the cheaper option, it's $2,000 a night, Tom. So that's a bargain.
I just booked the last week of the year 2 weeks ago.
Okay.
And I was lucky I got a room. That's how bad it is. I will
Paris,
say this.
where are we going? Rome, Paris?
Paris,
of course.
Okay. Paul, is this about the European planes, not just Air France, or is it about how uneven the service is on the American planes?
Yeah.
Which is, I don't have an opinion.
I don't know. But
interesting.
I think that, the business class over Europe is from the American Airlines is good. They got the lie flat beds. You have to get that. But boy, they charge for that.
Yeah. Woo. And what about the airline tickets? Because Tom, do you know Air France they're charging $24,000 for a return first class ticket between New York and Paris. That's in April. Can you believe that?
Wow. Thank you, Lisa Mateo. I hate you. Mrs. The Rock. I mean, $88 million.
Sure, he can afford it.
Okay.
He's not flying commercial.
Lisa Mateo, the newspapers are, hey, Sir Paul McCartney is out. Heated. It is something that's been terribly missed. Paul McCartney, Sir Paul, wants Joe Cocker in the Hall of Fame.
From within, I'm coming on, I'm coming to reward them. First we take Manhattan, and then we take Berlin.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. The markets move. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Futures negative 65. The futures, the bond market rather, comes in. The Sweeney yield craters here, Paul.
Man.
In the last hour, we go down 7 basis points from 4.00399 down to 394. Bond market's on the move.
It is. Bond market is definitely on the move there, particularly on the short end, as you mentioned. And on the 10-year, we've got it pretty steady there, 4.28%, Tom.
We'll have to see. We got a busy 8 o'clock hour for you with claims in 28 minutes as well. We have truly one of the experts on continental Europe debt with you in a moment. Right now, from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And we got futures really under pressure this morning. NASDAQ futures down more than 1%. Same for S&P futures. Dow futures down about 0.9%. Really 3 things in focus: higher global bond yields, trade war fears, disappointing tech earnings affecting the markets. So let's start with the global bond sell-off on the rise. Investors demanding more to buy debt. Germany's plan to step up spending. So in the U.S. right now, the 10-year, that is up about 6 basis points at 4.28%. We move over to Germany right now. That's up about 4 basis points. And in Japan, it's up about 10 basis points. Now we go to tariffs. So auto stocks giving up some of yesterday's gain. The White House delayed levies on them for 1 month. So you have Ford, General Motors, Stellantis, all down more than 1%. One last tariff note: Walmart has actually asked Chinese suppliers to lower prices by up to 10% to offset those tariffs. Only Walmart can do that, exactly. And finally, we mentioned tech earnings, and that is Marvell Technology. It's off about 16%. Its growth forecast fell short of the highest estimates. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Going to run to Brussels right now. Katharine Neiss with us as well for the PGIM. But first, Oliver Crook in Brussels on the new non-austerity of the continent. Oliver, how does the EU as a whole, how do they as an entirety look at Germany in this new lack of austerity?
Well, Tom, as you know, I mean, for the Germans to come and basically have the incoming CDU Chancellor Friedrich Merz lobby on behalf of Germany for the EU to loosen fiscal rules in order to have debt financing more easily achieved for defense spending across the European Union, there has been a massive paradigm shift. We've been hearing since November about the wake-up call from European capitals. We've heard it from basically every, leader within Europe. This is the week that went from wake-up call to them getting out of bed. Huge spending from the Germans, almost €1 trillion. We're also seeing it at the EU level today. That's what's being discussed behind me by the leaders here in Brussels.
I mean, Oliver, we got time for one more question because I know you're going to run to TV. Oliver, what I really want to know here is what does it mean for Lagarde? I got an ECB meeting today. If you and I were having a beverage of our choice at Brasserie Lipp in Zurich right now, Oliver and I have done this. It's great.
Nice.
Thank you, Reto. But Oliver, if we were having a longer beverage, what's it mean for Christine Lagarde?
I mean, listen, I think that for markets, generally speaking, the Thursday like today, they're all looking at the ECB. That is not so today. I mean, Lagarde couldn't move German yields by 30, 40 basis points if she tried. Friedrich Merz did it yesterday. It was really spectacular. And I think for the ECB, rather than setting the tone for the market, it is now going to be adapting to it. We don't know what the read-through is going to be or how much debt is going to be acquired across Europe. What is the impact going to be on inflation? These are all going to be the big pressing questions before policymakers. And you better bet that they're going to get a lot of questions about it in the press conference today.
Oliver Crook, thank you. Too short a visit. Let's do it longer next time with us reporting from Berlin and there from Brussels. This is joy. I had absolutely nothing to do with this. I think Eric and the interns figured this out. And I just want to take a moment here. People on the East Coast have absolutely no clue the academic heritage of far Western Canada, including the University of British Columbia. It is, I learned this years ago, it is just wacko how good the economics is. She's out of that combine. Katharine Neiss joins us now with PGIM as well. Like econometrics and trade economics, it was like absolutely definitive in my youth. The continent of Europe is what you focus on. Is it blowing up this morning? I saw Italian-German spreads really didn't move. It's a one-off lift, isn't it?
Yes, I think what we're seeing is in some ways a quote unquote, good move in an orderly move in asset prices. I think markets are taking this very positively. It is, I see it as a third in a row of Draghi's whatever it takes of the next generation EU announcement in July 2020. Right. This is big. This is huge. When I first heard these numbers, I was like, this is a go big or go home number.
This is a huge deal. Now, you and I studied Dooley Garber Folkerts-Landau, David Folkerts-Landau at Deutsche Bank years ago. Like the day Putin invaded, Paul, Folkerts-Landau told me the fiscal sphere, the space in Europe will never be the same. Culturally, are the institutions there, BNP Paribas, the entire structure of Europe, are they ready for this non-austerity?
This is a great question. I mean, it is a big move, but one argument that I've made a long time in Europe, we're so used to having this narrative following the sovereign debt crisis that debt is a problem in Europe. We think about Italy. More recently, we think about France. But if we look at the EU as a whole, or even just the euro area as a whole, debt to GDP is very, very low. It's much, much lower than any other comparable economic region, either in size or level of development. It's at the EU level, it's 80% relative to GDP. So it's way, way lower. They have loads of fiscal space. The issue for Europe is not the lack of money. The issue in Europe is not the lack of, general consensus about how these funds should be spent. The problem in Europe is there is no fiscal mechanism in place to allow this spending to happen. So what is so important about this signal that we're seeing from Germany is not just the size, but what it means for Europe working together, having leadership in its largest, most economically important economy in terms of going forward. And I think everything else, provided this is planned and executed, properly, there are risks clearly around doing big stuff. I think everything else is going to fall into line.
Tom, that answer just doubled my knowledge of what's going on.
Oh, this is important.
I'm learning so much
Paul,
here.
I want you to jump in here, but I sat with Lagarde at Jackson Hole. Sure, people called me up and said, this is a huge speech. What are we, Catherine, is that your phone? It's my phone.
No.
Hold on, let me see. Oh, it's Air France.
Air France. Your first class seat is available.
I never have my. This is the first time that's happened in age. It's your fault. Lagarde is fired up. Oh, that's KLM. We're doing great.
Exactly.
Paul, save me here. But Lagarde's fired up about this.
Amazing. And Catherine, in your notes here, I love this. The German spending plan is a game changer, a fiscal bazooka. Earlier expectations of a $200 billion defense bill were completely surpassed. So just putting into context, a huge announcement by Germany as it relates to spending. Will the rest of Europe, will they follow? Can they follow?
I think they're going to have to follow. I think it's going to be a multi-pronged approach. We're going to, get some announcements today. What I would say is a lot of these announcements coming today are, these are quote unquote easy. They are politically easy. They are financially easy for them to agree. It doesn't require, for example, unanimity at the EU level. These are announcements that I'm expecting today that are more in the incrementalism bucket. So if we want to see another big substantive move from here, I think what I would be looking out is, one, we need a signal that the EU, not Europe, but the EU is actually politically aligned and moving forward. That doesn't necessarily mean they've got to agree Eurobonds, but I want to see them smash some old chestnuts here along the lines of banking union, along the lines of capital markets union, because no matter how much public money they throw at this, it's never going to be enough. You need private money, and you need the signal that politically they're working together.
I got 8 questions, including how she fixes the Toronto Maple Leafs. Katharine Neiss, this is brilliant. And what I think we need to focus on in the time we've got left is what's it mean for Americans? Because the risk here is they're 80% GDP. Are they going to become like us with a out of control debt and deficit? I mean, is that the fear, the pushback that Europe's going to see?
That risk is always there, but there are mechanisms in place. We have these new fiscal rules at the EU level. Some people say, they're not really very, very stringent, but I think the proof is in the pudding. They have been pretty effective if absolute debt to GDP is only 80%. So, my guess is they are going to handle this in a way that is constraining.
Here's Lagarde when I was with her in Jackson Hole. This is Maynard Keynes, quote, "The difficulty lies not in the new ideas, but in escaping from the old ones." Brilliant. To Paul's good question, is Finland ready to escape the old ideas and become like America with a pop-in nominal GDP and all the other things?
I think Europe is ready to move forward. I saw, excerpts from the Munich Security Conference. We saw White House press conferences. I think from the perspective of Europe, this was a game changer for them. This really shifted. Going back to these German numbers, going into the weekend, the numbers were 200 billion for a defense fund only. Then on Monday, we heard 400 billion for a defense fund and 400 billion for infrastructure. Then we heard 500 billion for each of those. So
sounds like
this
America.
thing grew literally in a matter of days.
Across the nation and around the world, and particularly to those of you in the continent of Europe. Katharine Neiss with us with PGIM here. A brilliant conversation. This is what surveillance is about. We welcome you on your commute across America. And of course, we say good morning on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Paul, this in 30 years, Paul, this is a new conversation with Dr. Neiss.
And Catherine, talk to us about just the political support, the popular support. Is there that support out there across Europe for this new way of thinking about spending and maybe having to take a bigger role in defending themselves and what that costs?
Well, I think it tells you a lot, about where we find ourselves now. If you said we need to increase this defense spending with one-for-one cuts in the social safety network, I think you're going to come up against a lot of resistance, which is why we've ended up where we are, where the easiest flex point has been increasing debt and doing this through debt financing, because there is that resistance. But I think the reality is that over the course of time, slowly, some of this social welfare network is going to need to be reined in. And it comes back to your point about debt sustainability. So, for now, this is this extra, sludge of money over and above, but ultimately is going to have to come at the offset of something else.
The ambiguity here, and this goes back to Stiglitz, folks, not his Nobel Prize, but Stiglitz looking at the little g, the growth rate here. The American bargain has always been, we will grow our way out of our debt. Do you see a new nominal GDP, whatever the mix of it is, in Europe, where they become more like America and they get the little g to cover for the debt expansion?
I absolutely think that this is possible. And why do I think that? Firstly, demographics is not destiny. If I look at what's going on in Japan, it's remarkable. Japan grew faster in the fourth quarter of last year than the United States. This is a country that's facing a significantly, dramatic and dramatically different demographic headwind than the United States. And it's because they took a very long-term strategic view and they have invested, they've increased labor market participation, they've improved productivity, and so you can get growth. We're also seeing early signs in that the European periphery on the back of these next generation EU investments that potential growth is starting to pick up. We're not talking anything huge, but a couple tenths is actually nothing to sneeze at if you accumulate that over many, many years. So I don't see any reason why Europe cannot grow. Germany did actually grow on average by 2% GDP real on average every year in the decade before the financial crisis. Now they haven't grown at all since 2019. That's not normal. That's not normal. So I think there is absolutely scope for them to grow.
I'll get a few more in here. We've got someone who slummed in from Germany we've got to talk to.
Exactly. So in terms of Germany, how is the market viewing, or Germany and broader Europe now, is this increased acceptance of higher spending, is it seen as pro-growth? Does it raise inflation concerns? What are the markets telling us here?
I think the market for now is working on the assumption that this is a positive for growth.
I
that this
agree
is
with
going
that.
to
I
be
looked at a lot of charts today, and the yield move is contained.
Yes.
Cultural, this is critical for PGIM. If Greg Peters was here, this is the question he'd ask you. Is the institutional integrity there to sustain European business so they don't disinvest or halt investment?
Well, this is why I think in addition to this, big fiscal bazooka, I want to see a strong signal from the EU level that leaders there are working in unison, that they're willing to take hard political decisions that, are going to go against some vested interest to move forward. I want to see that signal. We haven't seen it yet. What we're going to hear today is not that signal. It needs to be more.
ECB, just out with the headlines, the European Central Bank says rates are becoming meaningfully less restrictive. Is that a societal less restrictive, or is that a growthiness imploding?
So, you asked the great question before. What does it mean for the ECB? This is a complete flip. For so long in Europe, it was really monetary policy that was leading and fiscal was lagging. And now fiscal is firmly in the driving seat. And the ECB is going to have to adjust to that. Okay. I think at the margin here, it's going to raise their, or at least put them at the top end of neutral. So yes, I was expecting this cut today. I think they probably will cut one more time, maybe later this year, but that they sit at that top end of neutral of 2.25% by the end of this year. So they are going to be more cautious. And of course, they need to see what this all means for the real economy. And it will take time, right? This stuff's not shovel ready. It's not going to impact on GDP on day one.
This is wonderful. Katharine Neiss from London visiting today with PGIM Fixed Income, a clinic like we haven't had recently on Europe. Thank you so much for joining us today. We now go to someone that understands what this will mean for American business. He has hit every bar in Berlin over his tenure there. Matthew Miller joins us here on the cultural impact as the ECB acts. Euro out to 108. I hope for all of you across America, this has been somewhat in English over the last 40 minutes. Matt, on the streets of Germany, or frankly, in your expertise, Stuttgart, What's it mean?
Well, I think it's interesting that we've seen the biggest jump in bond yields since 1989. Wow. To use a German word, Wiedereinigung, right? The reunification of Germany, which happened after the fall of the Berlin Wall, is estimated to have cost 2 trillion euros. And that's the ballpark that we're talking about here. I mean, Germany wants to spend 500 billion.
Right.
The EU wants to allow 800 billion of spending from their compatriots. Right. So we're talking about trillions of dollars in defense and infrastructure spending.
With all your experience reporting for Bloomberg in Berlin, and of course the junkets he took every week was just unbelievable. Reto couldn't even believe it. I have to go to Oslo and ski. Matt, is austerity dead in Europe this morning?
Absolutely. Austerity is finished.
The people are ready for this.
Friedrich Merz, who just won the most votes of anybody in the German election, runs the CDU, and they're the ones who put the debt brake in place. They essentially set the debt ceiling previously, and now they have obliterated it.
So is there popular support within Germany for this getting away from austerity, do you think?
That's a good question. To which I do not know the answer. Germany is as polarized and divided as the United States.
Really?
And keep in mind that
East and West,
both the far right parties and the far left parties in Germany are funded by Moscow. So in that sense, there is a lot of support for Russia.
I got a key question to go to your wonderful automobile podcast. What's the name of it again?
Hot Pursuit. Hot Pursuit with Hannah Elliott.
It's just what a life he has.
I know.
Plus, he gets in here at 10 o'clock.
Yeah,
I mean, it's
skates
unbelievable.
in, skates out.
Matt, is there going to be a tariff on a Beamer out of Germany? Are Americans going to pay that tariff?
Well, I believe there will be tariffs on BMWs that are imported from Germany. The key with that company in particular is most of them are made in South Carolina. So
my BMW X3, South Carolina.
Absolutely.
Nice.
BMW learned early on with the success of the 3 Series that it's better to produce where you sell. So they're one company that sells a lot of cars, that makes a lot of cars here, but Porsche doesn't make any cars
Isn't
here.
Porsche a mess right now?
It is in the same mold as Ford. It is losing a lot of money on early EV investments, but they still have huge margins, and those margins are going to be more than decimated by reciprocal tariffs.
This is big. This is happening.
And by the way, it's not just Porsche. Volkswagen has almost no production here. Right. Of course, there is a VW plant in Chattanooga, but they make the Passat. How often do you see a Passat on the road?
What's going to happen with it? I got 20 seconds. I don't even have that. I got 10 seconds. F-150 pickup trucks. How are they affected from Windsor to Detroit?
Well, they are mostly made at the Rouge in Detroit, but Ford gets about 25% of its production of other vehicles from Canada and Mexico, and they have the least production foreign. GM more, Stellantis even more.
Thank God we're out of time. Matt Miller, thank you so much. Hot Pursuits is the podcast.
I brought you a Rice Krispie treat.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment Offer ends March 31st. You can see if your company qualifies at oracle.com/Bloomberg. All right, we are moments away from more economic data. Labor data, particularly talking about jobless claims, comes ahead of the government's jobs report tomorrow. Ahead of it right now, futures really under pressure. We have the NASDAQ down more than 1.5%. S&P futures and Dow futures down more than 1%. Tech stocks, a big part of it. Two things, disappointing earnings and also Chinese innovation and artificial intelligence. We talked about earnings from Marvell. That has shares down 18%. Now, as far as Chinese innovation, we moved to shares of Alibaba. They're on the rise. They're up about 8% in Hong Kong. Its ADR is up 2%. This is after unveiling that AI model that it says performs just as good as DeepSeek with less data required. Then Alibaba's rival, JD, said its profit nearly tripled last quarter. Its revenue topped estimates. It's up 8% in Hong Kong. And so chip shares are under pressure right now. So NVIDIA, if we type in NVDA as I do this live because I forgot to put it before, and there we go. Their shares, flawless, down 3%. Had to get that in there. Macy's, though, their shares are off about 3% as we get to earnings because it gave a more downbeat outlook for sales and profit this year than expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. That is your Bloomberg Business Flash.
Lisa, thanks so much. Dow futures negative 450 here. I could go into the data, but we just don't have time for it right now. This is too valuable. Anna Wong joins us. Most people in academic and market economics would say she was the economist of the year last year. At Bloomberg Economics, he and her team, just a firestorm of intellect on where we are. If we have, Dr. Wong, a changed Japan reflating, seismic shifts in Europe off the Ukraine news to a less austerity, is America in Washington ready to adapt to that new world?
They have been ready for 20 years, Tom. So when I was working for a decade in the public sector at the U.S. Treasury and at Peterson Institute in the early 2000s, all we talk about is how to rebalance the global demand pattern, with U.S. being the demand generator for global demand versus China, Germany. And IMF, actually, and G20 started a working group devoted to rebalancing this pattern. And every, spring meeting in IMF, G20 meeting, it is about U.S. Treasury pushing Germany to do more on fiscal, for China to do more on private consumption. And suddenly it's happening. It's unbelievable.
Then why aren't stocks up this morning?
Well, because it's growth fears and also geopolitical uncertainty that's causing this reshift in global demand patterns.
Anna, how is the discussion the discussion of tariffs is so fluid on an intraday basis? Forget about an intra-week. I mean, just day to day to day. How is that impacting your outlook for GDP, for inflation? How are you guys trying to account for all that?
Yeah, I think the most certain part about tariffs impact on the economy is uncertainty. Yep. And uncertainty is unambiguously negative, at least in the short term. And when the uncertainty is resolved, there may possibly be a rebound. But it seems like the administration is in this for the long haul, because otherwise, why would they need to create an external revenue department? I mean, it seems to suggest that there is going to be some tariffs that will stick.
Right.
But there's going to be tariffs that will be fluid.
1 minute away, we're going to do the economic report and then come back to you with an analysis. Challenger was ugly. I'm not a big fan of Challenger, but there it is. Fine. But we got claims here. Have claims finally broken out on a 4-week moving average? Is the vector moving higher?
Oh, yes, because, just for the federal government claims alone, over the past week, we have seen just between the 15th and the 22nd of February in 1 week, federal government claims is up over 1,000. But we know from DOGE that at least about 30,000 cuts have been announced. And these are cuts that do not come with severance pay. So they will still... Are
they in the claims statistic we're going to see here in 1 minute?
No, but the 1,000...
We're DOGE-free. That's the new phrase.
So 1,000 in the federal will. So only about 1,000 is showing up today for federal claims.
Have you adjusted your unemployment outlook, rate outlook?
Well, we were always higher than the consensus. We have third quarter of 2026 at 4.8.
Okay.
Yeah.
But it's possible that at this point, I mean, I think the Trump administration is ready for pain. I mean, they explicitly said there will be disturbances, as Trump said. But I think it's hard to control the downturn spiral dynamics once they unleash it.
I got like 8 questions off that important statement you made. I got 20 seconds to the report. Quickly, are we ready for pain?
I think some people are ready for pain. Or my team is ready for pain. But
they got to work with you. Imagine that. Anna Wong with us, head of Bloomberg Economics. We're going to get the report out of the way here in a moment. With the data right now, and this was futures at negative 75. We're a more productive America is how we do it. With the survey, 1.2%. It comes in better at 1.5%. Unit labor costs are dampened. That's important. And claims come in with a whole 221,000. I don't have a revision yet, but it's sort of a more quiescent number. Equities lift a little bit, negative 75 to negative 71. Standard & Poor's, the VIX, 1.82. Where's the Sweeney yield, Paul?
Oh, we're down there to
3.95. It's a come up. It's not a whole number, but waiting for revisions. Yep. It seems to be more quiescent, and as Dr. Wong said, maybe it's a little bit DOGE free this morning. I love saying that. Yep. One of my kids lost money on DOGE. Remember that. Our economic indicators with Anna Wong. They're brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Paul?
Anna, with all the cross currents out there emanating from Washington and other areas, including today with Germany and the European Union, what does our Federal Reserve do? I mean, I don't know. I mean, do they just kind of wait and see like the rest of us?
Well, the Fed has explicitly said they are going to wait and see, and the DOGE activities and the cuts to fiscal spending should be disinflationary, and it should be obvious that it will be disinflationary by early 2026. So the timing of when all these negative fiscal impulse will show up in the data matters for the Fed, and so we think that they will only react to the additional disinflation from DOGE only in early 2026. But that said, we still have the Fed cutting 75 basis points this year on higher unemployment rate.
Right. Frame out for us here. You said 4.8% unemployment out Labor Day, maybe after that a little bit. Frame out for us the Anna Wong real GDP and nominal GDP call for this nation.
Yeah, so we are expecting the first quarter to be about 0.5% real GDP growth, and the second quarter to be 0.9% GDP growth. Much of the fluctuations in real GDP in the first half would be due to this yo-yo ball. First, you have firms stocking up goods in anticipation of the tariffs, and then they have consumption slowly weakening because the consumers no longer need to stock up, and so when and the inventories would be drawn down.
So what about the back half of the year? You got a blended 0.7% for this first 6 months. That's not good. What about the second half?
Well, our baseline right now is for DOGE to reduce spending by about $100 billion, and with that will just knock off only 0.1 or less, accounting for spillovers, multiplier effect in the second half. So we still have the second half running roughly at 1% or so GDP.
How will the Trump administration respond to that? You've got a 12-month framework. I'm going to be charitable and say 1.1, 1.2%. It's all squishy, folks. It's Anna Wong. We're not talking certitude here. Well, that's unacceptable to America.
Well, what matters to the Trump administration, it seems like, that in terms of timeline, is November 2026. So if you have weakened economic growth this year in order to accomplish shrinking the size of the government, then you should start to see some rebound in 2026, although unemployment rate would stay at a higher level.
Paul, take a memo. Anna Wong lifts the market. See how she does that?
Yep.
We're negative 450 on the Dow now, negative 400. SPX negative 75 to negative 69. Dr. Wong, congratulations again to your impact on American economics this year with Bloomberg Economics. Just really interesting stuff, to say the least. Did we get a break? Can we talk like Duke basketball at some point?
Sure, Duke Carolina this weekend.
Duke Carolina?
Sure.
This week? You got row 2 seats.
Yep.
You and David Rubenstein.
That's right, David Gurley.
From New York City, and David Gurley. From New York City. Stay with us on YouTube. Subscribe to Bloomberg Podcast. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got tech stocks putting pressure on the markets with Marvell Technology. That's among one of the biggest pre-market losers, down about 17%. Then you add to that the disappointing forecast from database software company MongoDB. That's off about 18%. So we go to NASDAQ futures, down nearly 1.5%. S&P futures down 1%. Dow futures down about 0.8%. We have the 2-year yield, 3.96%. That's down 4 basis points. The yield on the 10-year, 4.29%. And that is little change. To commodities, we have oil edging higher, gold declining. The Bloomberg Dollar Spot Index down about 0.1%. More economic data out. Initial jobless claims, they came in a little bit lighter than expected. 221,000 applications. They were filed last week, and this comes ahead of Jobs Day tomorrow. As far as earnings, Burlington Stores, their shares up 13%. Fourth quarter comparable sales and profit topped forecasts. We go to Kroger, down 1%. Gave an upbeat outlook, and this comes after that quick exit of its CEO. And finally, Victoria's Secret, they're off about 3%. Adjusted operating income for that first quarter missed estimates.
Still public?
That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thanks. So, how about you have an observation there?
No, just that store across on Lexington Avenue, still vacant, was a Victoria's Secret store.
It's an interesting dynamic now, to say the least. Our dynamic is a somewhat improving tape. I don't want to oversell it. Dow futures negative 450, now negative 381. Our team has worked all night on what's going on between, just to summarize it for our American audience, a shift in how we approach Ukraine. We move from austerity in Europe to a supposed liquefaction of debt, I guess is one way to put it. And you wonder, to begin with, what it means for the elites across Europe. Monica Defen joins us right now with the Amundi Investment Institute in Paris, and she's absolutely definitive on this. It was what a joy to talk to Katharine Neiss earlier with PGIM. I'll cut to the chase. At La Tour d'Argent this afternoon at lunch in Paris, overlooking the brand spanking new Notre Dame, you're going to have a fancy lunch with seasonal duckling. On we go to the Crepe Mademoiselle. What do the fancy people of Europe think of this world turned upside down?
Definitely there is a lot on the plate, and what we see is, on one side, some countries that have the fiscal space to go bold, notably Poland, Germany, some others that have not. So Macron probably now is taking the lead, and this is something that, honestly, it was back at 2017 when he said, we really need in Europe to speed up and get some defense spending. So probably is going to lead the queue, and we will get there. I don't know how much and how fast, but this is the final destination.
I mean, this is a sea change for both the U.S. and Europe broader defined. if there's going to be a lesser role in the U.S. across Europe, that means obviously the European countries need to step up, and we're seeing that at the EU today. What does that mean for investing? How has that impacted your investment outlook as you think about allocating capital across the globe?
Well, the big question is how this is going to be financed and how this will have an impact on growth, because it is a structural, it is a permanent increase in expenses. And this is why I believe we are seeing the Bund going to the sky. This is what worries us at the moment. So I would say that for the time being, nothing has been approved from the parliament in Germany. So the situation still remains quite fluid. So we take hold, staying cautious on the risk asset.
If you were at the Lagarde press conference, what question would you ask the head of the ECB?
Quantitative tightening. What are you going to do on that? Because on cutting rates, this is something that was consensus view, but on QT...
Yeah, it's old news. I find this absolutely extraordinary. How should the United States respond to this? Is all of a sudden Europe our destination for marginal investment? I mean, at Amundi, what do you tell American clients today of the action of the White House that has changed this whole dialogue?
To us, it really goes back to the consequence on the asset classes, so on rates, on the currency, so on the US dollar. Honestly, we are short the US dollar, long euro, because we do expect the US dollar to progressively depreciate. In the past, it was because of the Fed. We thought that the Fed action and the asynchrony between Fed and the ECB would have led to depreciating currency. But this is what I think the U.S. administration wants. They want a weaker U.S. dollar.
Yeah. Just looking at the German 10-year Bund, just, since February 28th, when was it 2.4%? We're now at 2.86%. So big move up in German yields. Is the expectation with you and your clients and investors in Europe that this backing away from austerity is a good thing for the European economy?
It is, as long as the increase in the debt spending goes into improving growth. So we are talking about a country that has a 63% debt to GDP ratio, which is honestly, it's not, it's not an issue. This is Germany. This is Germany.
U.S. over 100 now.
Yep.
But I'm talking about Germany. So if on spending on infrastructure, this is going to be growth constructive. On military expenses, the multiplier might be a little bit lower. So
I got to get this in. I mean, we're going to go to the news here in the United States, Monica, but I think this is just so important. So Spain expands their debt. Germany expands their debt, which is like Mississippi expanding its debt in Michigan. To Lagarde's point, where is the fiscal union that will affect this efficiently? I don't see it.
Well, what we need to understand is how the framework will be fully deployed, because if it goes down to the nations, this is where the issue will be, and not all the countries will spend at the same size at the same time, just because they have different needs. So the issue might be eventually to have an unbalanced Europe with some countries that have been spending more, Poland, Germany, and some that have less room. Let's see what the Commission today will vote on the escape rule, just to allow some more space to the countries, to the state members.
So if we ever do a remote at La Tour d'Argent, right there in the front overlooking the river, can you join us there?
Sure.
Yes.
For it'll be like lunchtime in
exactly.
Paris. We could do that.
We can lunch in Paris.
We could,
Italy's better, though. The food is better.
Well, we'll do both. We'll do the deck of the Hassler, and then we'll do La Tour d'Argent in Paris. Lisa, it's perfect. Mana Defense, travel guide for Europe. Thank you so much. Head of Amundi Investment Research. For our American audience, huge response. Thank you so much. This is a really arcane show today for America, but this stuff is important. With our news in New York City, Michael Barr.
Thank you very much, Tom and Paul and Lisa. President Trump is preparing to sign an order that would instruct Education Secretary Linda McMahon to begin dismantling her agency. It sets the stage for a potential power struggle with Congress and another round of legal challenges from opponents. An administration official told the New York Times the order will likely be signed today. President Trump is exempting automakers from newly imposed tariffs on Mexico and Canada for 1 month. White House Press Secretary Caroline Leavitt said it is a temporary reprieve following pleas from industry leaders.
The 3 companies that he spoke to are Stellantis, Ford, and General Motors. They requested the call, they made the ask, and the president is happy to do it. It's a 1-month exemption.
Meanwhile, farmers worry about a trade war. This man is a produce grower in the southeastern corner of California.
A lot of questions right now across the produce industry of what the effects are going to be, but as of today, we haven't seen any effects.
After spending more than an hour meeting with House Republicans on Capitol Hill last night, Elon Musk is doubling down on his efforts to slash the size of the government workforce. Musk says that there are a lot of opportunities to improve expenditures in the government. Republican Congressman Derek Van Orden of Wisconsin said he spoke to Musk about veteran benefits and farming programs.
People don't quite understand that a farm, even though sometimes they call it, factory farming, it's not like manufacturing. And you can't start and stop a farm. You can't ask a cow to quit milking as you do a review of a program.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Let's reframe this, folks, for the American audience. Good morning on your commute. Good morning on YouTube as well. Paul, we've never seen this. I mean, where we are is I have no idea what Lagarde says at the press conference.
No, and, as Monica Defense said, a lot of economies are able to do this. Same, she mentioned Germany and Poland. They have the
mention France.
She did not mention France. Yeah. She did not mention Italy. She did not mention Spain. So to the extent companies need to step up, it could be, or countries.
And what's interesting is it all starts, folks, with the U.S. administration. From New York City, Bloomberg surveillance.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Thank you for the comments out on YouTube. Really brilliant discussion there about all that we're seeing. And I'm going to say this, folks, I'm not editorializing. I think we can all agree. A world turned upside down. A smart comment there on is Spain really going to come in like Poland and Germany to do austerity. There is an American market. Paul, we searched high and low at Bloomberg to find someone qualified on the character of this drawdown. Who did we find, Paul?
Right around the corner, our very own Jess Metten here. Jess, thanks for joining us here. She covers all the markets for Bloomberg News here. We got a lot of economic data today. Of course, Jobs Day tomorrow. The VIX, I'm looking at volatility. VIX is above 23, almost 24. Woo. How does the market trace and kind of pricing in volatility here?
Well, if you're looking at the VVIX, so that's the vol of the vol for the VIX, that's actually a 0.25% higher than it's been over the last year for if you're looking at its average. So you are obviously seeing that picking up, and especially when you're thinking about other corners when it comes to volatility as well. So the VIX futures curve is sending a bit of a distress signal here when you're looking at that. So traders lining up options against a steep pullback in the S&P 500. They're actually reaping some of those benefits because a lot of people that were putting on hedges in the last few years, obviously we're getting burned because the rally was unstoppable the first 2 years of this bull run.
So the option market's telling you that traders think there's maybe more downside to this market?
So there's ways to track the SPY, so the ETF that tracks the S&P 500, as far as where they're thinking whether or not there'd be potentially a 10% drop in the next month. That doesn't mean that necessarily is going to happen, but you can look at that versus how they're hedging, whether it's more likely that could happen or not. So you're starting to see some of those hedges pick up right now.
So what are we seeing just out there in terms of trader sentiment? Because earnings were generally very good for the quarter.
They were.
The Fed looks like it's going to be cutting 2 or 3 times, but I guess it's just some of the headline risk as it relates to tariffs and so on.
Yeah, so fourth quarter earnings, obviously backward looking, but that would be 6 consecutive quarters of expansion and growth for the S&P 500.
Right.
But also you're seeing 2025 earnings estimates come in for the S&P 500 a bit. Now they're closer to 10%, had been closer
Still
to 13%.
double-digit.
Still double digit. And I want to
Okay.
mention though, in 2026, still strong. It hasn't budged yet. There's still 14% growth for the S&P right
That's
now.
a really important insight. Another insight is Pittsburgh, Clemson, Syracuse, North Carolina State, UVA, FSU, Miami. It's not Vermont, it's Virginia Tech.
Yep.
North Carolina's won 6 in a row. Are they set, Jess Benton, to UNC to take out Duke like the fighting Texas Aggies took out Auburn?
Oh, I mean, I feel
That
like
was a great win.
Paul has a lot to say about Duke, of
They
course.
did it.
But
I mean, what do I know? They said the Aggies physically defeated
That's what-
Auburn.
Yep.
Does UNC have the ability to physically defeat Duke?
No. So, I mean, the
Wait.
talent at Chapel
Radio,
Hill.
you got to say more than no.
The talent at Chapel Hill is just, I've never seen it so bad. I mean,
They've won 6 in a row.
Yeah, but it's the ACC. I could win 6 in a row in the ACC this year. But it's just, I'm surprised that their talent level is as low as it is. But again, it's Duke, Carolina. It doesn't matter what the records are. I think literally over the last 100 games, it might be 50-50, literally. And points scored
Listen,
over the
see how
last
he
100
gets
games.
fired up on this?
Basically the same. So it's always
the boom doesn't get him fired up.
Exactly.
Is that a maroon bow tie I see you wearing, Tom Keene? Is it just for me since
Yeah,
I'm
I wore this just for you. No, I wore this for Christine Lagarde. I mean, she's out there. We're going to
Okay, I'll
follow
allow.
the headlines on Lagarde. It's really, truly an historic press conference going back to her Jackson Hole speech. Her economist, Philip Lane of Dublin, has been really on top of this as well. I got a euro advancing. The euro's at 2.8 standard deviations, stronger euro, weaker dollar. It's a really elegant chart for those of you keeping score at home, well out over 108. And I would say that most of the tone from experts we've heard today is a very constructive tone. And it's finally this debt-induced surge that we may get off of the White House actions will lead to a constructive nominal GDP across Europe. Some of the ideas that Christine Lagarde has to work with. This was mentioned, Brian Belsky mentioned this song yesterday. I forgot all about it. Rick Springfield.
Oh, yeah.
You know,
the 80s.
Classic.
She's got himself a girl and I wanna make her mine. And she's watching him with those eyes. And she's loving with that body, I just know it. And he's holding her in his arms late at night. You know, I wish that I had Jesse's girl. I wish that I had Jesse's girl. Where can I find a woman like that?
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Stocks down, recovered a little bit. Forget about it. Reversal now near new lows for the day, negative 73. Standard & Poor's 500. NASDAQ down 1.7%. The VIX not out 2 points, 23.74. We'll see where that is here. 30 minutes away from the market opening. Let's get right to it. I got a busy hour with all going on. Lagarde continues to speak. At the ECB, incredibly important press conference, and we'll see how that goes. We'll give you headlines on that euro midpoint here off the surge in the euro that we saw as they cut rates. Bloomberg's surveillance this morning brought to you by IBKR, with the average U.S. temperature this February of 2025. Will it exceed 36 degrees Fahrenheit? At IBKR Forecast Trader, the yes was recently at 44%. What's your take? Trade your prediction. Do that at ibkr.com/forecast. Last trading day for this contract is March 9. It ascends here. Look for that again at IBKR Forecast Trader. Right now to the Bloomberg Business Flash, Lisa Mateo.
And we have futures really having a tough morning. We'll start with NASDAQ futures down more than 1.5%, 351 points. S&P futures down more than 1%, 74 points. Dow futures are down 0.9%, 398 points. All right, so a lot of things going on. Three things in focus. You have higher global bond yields, trade war fears, disappointing tech earnings. So I want to start with the global bond sell-off after Germany's plan to step up spending. Right now, we go over to the 10-year. As for the U.S. right now, you could see it's about at 4.27%. Then we go down to Germany right now, up about 5 basis points. That's what I wanted to point out. And then Japan is up about 10 basis points. Now we go to the latest on tariffs, since we mentioned it. Auto stocks, they're kind of giving up some of yesterday's gains because the White House delayed those levies on them for 1 month. So you have Ford and Stellantis down more than 1%, General Motors down 2%. And then after meeting with leaders of the country's automakers, sources say President Trump is going to gather with big tech leaders. That includes the CEOs of HP, Intel, IBM, Qualcomm on Monday. And that's to talk trade policy, U.S. manufacturing. So you have Intel down 2%, IBM down more than 1%, Qualcomm off 2%. And sticking with tech, we have shares of Marvell Technology really pulling things lower, off about 17%. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thank you so much. Very quickly, a press conference like Lagarde, to be blunt, I think has never had as well. Its mixed risks to growth remain tilted to the downside. She then goes on to say rise in defense spending could also boost inflation. So I think the mix there is some measurement of stagflation. She says loan growth is picking up as well. Increase in defense spending could add to growth. It's a toxic soup, a bouillabaisse, as they say. We're going to continue to follow the headlines here. The litmus paper of the system is the euro to 4 decimal points. That's the way Constance Hunter does it. 108.31 and stronger euro. Paul.
Yeah, I don't think we're going to get parity for you, Tom, and the Paris Cafe anytime soon. That did not work out. Constance Hunter joins us here. She's the chief economist at the Economist Intelligence Unit. Hey, Constance, it just seems like for all market participants, our heads are spinning here as we're trying to figure out what tariffs are on, what tariffs are not on, who's exempt, when do these things go into play? How does an economist who's supposed to kind of figure out, I don't know, economic growth and inflation, how does an economist deal with all this cross current?
Yeah, very great question. And I think it has to be a multi-pronged approach. Of course, we're doing rigorous, detailed analysis of all the different factors that are being impacted by potential tariffs, right? And so we have lots of different spreadsheets running scenarios, literally running through every line of the tax code, looking at the USMCA, what's covered, what's not covered, what has steel in it, how is that going to reverberate through? But of course, we don't know where we're going to land. And until that point, we have to come up with another way to ascertain the impact of all of this uncertainty on how households and businesses are going to behave. And one thing that we look at is an uncertainty index that has been extremely good at forecasting recessions. And it is presently not as high as it was right before the pandemic, but it is higher than the global financial crisis, the dot-com bubble bursting, and the S&L loan crisis, right? So we know that this level of uncertainty is going to eventually cause a pullback in household spending and corporate capex.
It's Math Thursday, folks, with Constance Hunter. We like to do Math Thursday with Constance. So here's the math. The Yale Budget Lab have really done some strong work on this.
They have.
Tariffs blended in, I'm going to give me like a 0.4 reduction in GDP. I think we all understand that statistic. So if I have a fictional run rate of 2.x, say 2.5, 0.4 divided by 2.5, you come out with like a 16% reduction in oomph What's it do, Constance Hunter, to the bottom half of society?
Yeah, well, I mean, that's where the price increases. And if you're looking at stagflation, which is obviously a real risk in the US, I think Alberto Musalem was at NABE earlier this week. I happened to have the pleasure of sitting next to him at lunch. And, you know, he spoke in his official remarks about how the Fed can afford to be balanced, but only if inflation expectations are anchored. And they're not going to remain anchored with a nudge up in prices from tariffs, right? Especially because this is very different than the first time we had Trump escalating tariffs, because we were coming off a period of very, very low inflation and relatively low consumption. We have a different mindset now. Companies know how to raise prices. And of course, that's going to impact the bottom half consumers. But let's not forget, all this market volatility impacts the top half consumers as well, or should I say the top 10% that consume 50% of all the consumption.
Paul, we just got, just for a second, a Kapasanka, a 103 handle on DXY.
Yep.
Currency markets are talking to us.
They are talking to us, Tom.
Yes, all the markets are talking to us.
Constance, I mean, I think we're even hearing from some companies, whether they're packaged goods companies or restaurant companies, just saying uncertainty is causing them to take down their growth projections here. So even if the policies, whether they're tariffs or changes to immigration, are more muted than maybe we initially thought, just the uncertainty seems to be having a negative impact on demand.
I would agree. And then the uncertainty from other policies, perhaps coming out of the DOGE and other areas. We also don't know how we're going to handle, we have a debt ceiling event coming along. We don't know how the budget is going to work out.
Oh, yeah.
And I should point out that there's a sort of disconnect here. I would call it maybe the tariff trilemma, right? Because if you are going to raise revenues as a result of these tariffs, which you are then assuming, right, is that your import level does not go down. So you can't have both. If tariffs work to reduce imports, then you're not going to raise as much money from them, for example.
And the Q&A in Frankfurt right now, it's getting very interesting. Christine Lagarde, the president of the European Central Bank, very attentive to outcome of the Brussels summit. Everything will be a factor of details on defense plans. I'm going to go back and read her Jackson Hole speech where she and I spoke at length about it. That was a really heated conversation. But Paul, it's like from 2023, a speed warp up to where Lagarde was in August of 23.
Hey, Constance, given all the cross currents and the uncertainties that we are talking about, how do you think the Federal Reserve is kind of factoring that in terms of their policy?
Well, a few things. One is they can afford to take a balanced approach, so weighing both prices and employment equally, so long as inflation expectations are anchored. And I think that caveat is really key. The other thing that they haven't said, but which seems obvious in the data, is that they can afford to wait and almost do a forced policy error by waiting too long should we see weakening growth, because they know that there is so much money in mortgage equity. So, yesterday, as we got the weekly mortgage numbers, you saw all you took was a very small decline in mortgage rates to see a big run up in financing and home mortgage applications, first-time home buying applications. And so if we were to get mortgages down below, say, even 6%, I think there's a lot of money on the sidelines to be deployed. So I think for that reason, the Fed can afford to wait, and they don't want to see a situation where they're not communicating that they're serious about inflation.
Constance, thank you. Constance Hunter with the Chief Economist, EIU, this morning. This is Lagarde continues to speak. It's now Q&A, which is always, it's very different Q&A from the Fed meeting. It's a really, really acute, whole different tone that you get there. Right now, the latest headline, well, it's on the Brussels summit as well. One headline I'm seeing here, this from Bloomberg, Lagarde sees inflation risk from more defense spending. I think we've heard that, Paul, that you may get, I don't want to oversell this as stagflation. I don't know what Professor Summers would say, but I'm not getting that tone. But at the same time, what a shift going on for investors.
Yeah, exactly. I mean, I'm just looking at some reporting coming out of Bloomberg News out of Europe. I mean, just talking about how reliant Europe is within NATO for the U.S., not just for military leadership and firepower, but for communications, intelligence, logistics. And Bloomberg News reports that ammunition stockpiles could run low within days, and rearming will take years. So this is a long-term pivot for Europe.
We will have to see. I was watching Liverpool beat PSG, which I thought was sort of interesting as well. Joining us now on yield, Gennady Goldberg is head of U.S. rate strategy, TD Securities, a perfect guest to speak to this morning. With all this said, let me just cut to the chase, Gennady. Do you just assume money market yields come under 5%, start migrating down 4-ish, even lower?
Yeah, I mean, I think you have to assume that front-end rates continue to kind of drift lower over the course of over the course of the next year. How much lower and when? That's really the big question for bond investors right now. You know, you saw the pricing for cuts go from 25 basis points in 2025 to now about 75 basis points, basically in the course of a couple of weeks. So markets are really highly uncertain here.
So I'm looking at the 10-year U.S. Treasury, Gennady, right around 4.3%. Where does that end the year, do you think?
So we've got that right now still at about 3.8%. We were actually long in our model portfolio at about 475, got out at 4.3. So we're actually waiting here to reload. Obviously waiting before payrolls. You know, we'll certainly see that data print. I do think the market sentiment has really shifted, right? We've gone kind of from massive exuberance about growth. You know, I was getting questions about the economy reaccelerating to now really despair. I mean, we've really kind of flipped the switch in that sense. And now I think the market may be overdoing it a little bit that way. But, you know, you've got lots of uncertainty through, you know, trade, through immigration policy, fiscal policy. All of that is starting to weigh, and it's kind of pouring gasoline on that uncertainty fire.
Does our full faith and credit U.S. market shift, adapt, change on price based on what's going on in Europe?
I think a little bit. I mean, in the last couple of days, you've seen some real divergence between U.S. and European yields for obvious reasons. You know, Europe's got a shiny new issuance program, and that market is trying to absorb that by actually repricing. I think the U.S. right now is just trying to battle with too many themes. You know, there's supply over in Europe. There's, you know, real kind of geopolitical issues that we have to price in. There's fiscal policy, which is a complete unknown, I think, for a lot of investors at this point. And then there's what's happening on the data front, which, again, you know, expectations have jumped from extreme strength to now extreme despair, and effectively overnight.
So what is the market pricing in here, do you think, Gennady, in terms of growth here? Because the data points still seem pretty solid as it relates to, you know, the U.S. economic activity.
Yeah, I mean, you know, just looking at what we've seen that was really weak. I mean, I would say it's retail sales, the PCE spending report, ISM manufacturing. But if you really take a kind of a step back and look at the levels, you know, you saw the retail sales number come in after months and months and months and even quarters of really strong growth. So it's a bit of a pullback. It's not massive just yet. The ISM manufacturing index, again, retracing some of the way, you know, some of its run up into the election. So it's still a little bit higher. So, you know, we haven't really seen the actual hard data surprise that far to the downside, but it's the surprise that matters. I think the expectations are running absolutely sky high, and now they're rock bottom at this point. So the market is setting itself up for failure, I think, by overreacting to just about every data point.
Gennady, thank you so much. Too short a visit with breaking news today. We've got to run. Gennady Goldberg with us, head of U.S. rates, TD Securities. Lagarde, I've never seen, Paul, this set of headlines, maybe with Draghi once or twice. Lagarde, ECB is not pre-committing. We'll decide based on data. We call that data dependency across the Atlantic. Here, from one day to the other, comma, situation changes dramatically. Wow.
Yep.
That's where we are.
I mean, I think the ECB is like all the rest of us. We're just kind of taking it in, drinking from the fire hose every day.
Lagarde says no opposition to decision to cut the key rate today. Just a movable feast. Again, the euro 108.27. Stronger euro dashing away from the parity call. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Trump is expected to issue an executive order to abolish the education department. It will likely happen today. According to the Wall Street Journal, the draft of the order directs Education Secretary Linda McMahon to take all necessary steps to facilitate the closure of the department. On Capitol Hill, Republican senators have told Elon Musk he needs congressional approval for cost cuts or they could be overturned in court. The latest from Bloomberg's Amy Morris in Washington.
Senators suggested Elon Musk send a package of cuts to Congress for approval through a process that requires only a simple majority in both chambers. Republican Senator Lindsey Graham.
I want to fix it quickly, is what he said. I want to keep the momentum. But from a political point of view, we need to take the work product of DOGE and put it in a rescission package.
Now, Musk met with Republican senators and is set to meet with House Republicans, but any effort to formalize the cuts will likely come after a March 14th government funding deadline. In Washington, Amy Morris, Bloomberg Radio.
President Trump is granting temporary relief from tariffs to the big three American car companies, Ford, General Motors, and Stellantis. But his call with Canadian Prime Minister Justin Trudeau yesterday did not lead to any relief from the 25% tariffs he is imposing on other goods from America's neighbor to the north. Top Trump administration officials visited Texas alongside Defense Secretary Pete Hegseth and Director of National Intelligence Tulsi Gabbard. Vice President J.D. Vance spoke in Eagle Pass, hinting at military action to combat drug cartels.
Every single day that we continue to keep this border safe, that means less migrant crime, that means less fentanyl coming into our communities.
And finally, more than 36.6 million people watched President Trump's speech to a joint session of Congress. That is a 36% increase compared to former President Joe Biden's first address to Congress in April of 2021. Wow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
And now, very importantly, Matt Miller came bearing gifts here.
Yeah.
Just, a little bit about my childhood. My mother was the worst cook east of the Mississippi River. And the only thing she could cook successfully was Rice Krispie treats.
Oh, man. How about that?
How does that taste?
And Lisa, I got good news. They're not gluten-free. Some people think they are gluten-free.
No.
The good friends at Millville make a crispy rice, toasted rice cereal gluten-free with a marshmallow.
Oh, well, there we go. So there is hope.
This is my childhood.
How's the treat? How's it?
It's
very. Do you think Mr. Bloomberg would have a subpar rice? Michael Barr. I mean, this is one of the 4 food groups.
Oh, hey, man, my Rice Krispie didn't even make it out the studio because I tore it up as I was leaving out. That thing was good.
Thank you to Matt Miller for bringing his fine cuisine.
Yeah, he brought in a little glass tray and everything.
Look at that.
Yeah, we don't see it because we're down here, slaving away.
Working away. I wouldn't eat those things when my mother made them for me. I'm not going to eat
them. Are you kidding me? Wait a minute. Let's take a poll in the studio. I control. Ken Foley, wake up. How many people were weaned in the right side of the fridge, Michael Barr? There was that block of Velveeta cheese.
Oh, yeah.
Yeah,
absolutely.
And in some houses, the government cheese. That was in my house.
We had the government cheese. Yeah. That's absolutely right. We did. Well, we think, and that program will probably go away. Don't do it, White House. We need our Velveeta cheese. There's a little bit of anecdote about how we used to eat. Lisa, have you ever had a Rice Krispie treat?
I have. I've made them with my daughter, but I use different things.
Oh man!
Substitutes.
What, Cheerios for Rice Krispies? What?
Yet another reason not to hang out at the potato shop.
Un-American. It's just no other way to put it. I'm watching Bitcoin seriously, folks, as a barometer of this uncertainty that Christine Lagarde is talking about. Wolfgang Price it looks like he's up now speaking in Frankfurt, who's her wonderful assistant. But I got Bitcoin off the bid. It was 90,000. I don't want to make too much about it, Paul, but there is some correlation out there with futures negative 71.
Exactly. It's just kind of a risk asset, if you will, for a lot of people. Kind of view it as a good proxy for just risk in the marketplace, and we're down about 0.5% here to just under $90,000 per token. Again, remember that the high from about a month ago was 107,000.
We thank all of you for paying with us today. I was a little worried here, all this Euro talk in America, and thank you so much for the comments about really informed discussions about the turmoil. This is, again, the change in American policy on Ukraine over to the continent of Europe. Futures negative 72.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures under pressure. Tech stocks, a big part of the decline. We'll start with NASDAQ futures down more than 1.5%. S&P futures down more than 1%. Dow futures down nearly 1%. So on one hand, we have the disappointing earnings. We have Marvell Technology down 17%. Then on the other hand, we have Chinese advancements in AI, and that's putting pressure on chip stocks like NVIDIA, which is down 3%. What advancements are we talking about? We're talking about Alibaba. It unveiled an AI model that it says performs just as good as DeepSeek, but with less data that's required. So its shares are on the rise. It's up about 8% in Hong Kong. ADR is up nearly 2%. And then you have Alibaba's rival JD.com. It said its profit nearly tripled last quarter, and its revenue topped estimates. So they're up about 8% in Hong Kong. ADRs rising about 3%. We go to the two-year yield, 3.98%, down 2 basis points. The yield on the 10-year, 4.29%, and that's up 1 basis point. The Bloomberg Dollar Spot Index, that's down about 0.1%. We have the euro up 0.2% at 108.20 against the dollar. That's after the ECB delivered that anticipated 25 basis point interest rate cut. And finally, Macy's shares, they're off about 6%. It gave this more downbeat outlook for sales and profit than was expected. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Jason Furman up at Harvard out with a really important chart. We gave it to you at 8:30 where the buoyant productivity number, unit labor costs come in. And Professor Furman simply says, good news in the revised productivity data. He makes clear AI probably barely in the data yet, but we're really nicely off the trend that he models off of the pandemic. So that's the gift there of productivity. Right. It continues, according to Jason Furman.
All right, let's talk to a professional here, Tom, about these markets. Eric Friedman joins us here. U.S. Bank Chief Investment Officer joins us here in our Bloomberg Interactive Broker Studio. Eric, what Tom, Lisa, and I do all day is just try to deal with this fire hose of noise and news coming out of all parts of the world. Today we've got some news coming out of Europe, but it seems like every day there's news coming out of Washington, D.C. Got to make it tough for managing portfolios of money here. How do you guys kind of put that into your model and think about where to invest for your clients?
I think the analogy I'd give, it's like Tom and I are from upstate New York, and we learn hard about separating the wheat from the chaff in that vicinity, and that's really the key thing. We think that the most important thing is really to pay attention to the data, especially corporate CFOs. What they're saying really matters. The survey data that we get, UMISH with inflation expectations at 4%, understanding where consumers' heads are, really important, but ultimately what CFOs are doing, not what they say they're going to do, what they're actually doing, that for us is really moving the needle. That's kept us, Paul, really more glass half full, even despite this move lower. We think if S&P holds 47.28, that's the 200-day, a lot of potential selling obviously could follow that level. We think that we'll be in decent shape, but CFOs do what they, see what they're actually doing versus what they say they might do.
I mean, the heart of the matter here is U.S. Bank is saying, we may get a correction, and it's opportunistic. And 99.825% of the audience, including young Lisa Mateo, they've never witnessed a correction.
Yeah, that's I think, Tom, one of the things that we're really experiencing over the last couple of years has been this lulling of VIX, lulling of everything except for bond yields. I mean, this has been a market that has been without a sort of garden variety 7-10% type of down move. And I think the reasons that the levels we think ultimately will hold is because the consumer is still in decent shape, not great shape, but still in decent shape. So again, we think this is maybe the pause that doesn't necessarily refresh, but at least gives a chance to get those clients who are sitting in cash to be in more productive asset classes.
How about in the fixed income space? I mean, do we sit in my 2-year treasury at 4%, or do we try to take some credit risk here?
Yeah, it's one of the areas, Paul, that we've been active in is in the credit space, is specifically structured credit, which is sometimes viewed as that esoteric spot of the bond market, but you're looking at things like, CLOs and CDOs, which were, really bad medicine in the 08-09 period. Those have been cleaned up. We think there's some opportunities there. Longer duration municipal fixed income, which is something that if, people who are obviously taxed, which you are obviously in this state, in the surrounding tri-state area.
In North Carolina.
Yeah, we small, much smaller than here. But that's a spot that we think you can take on some duration risk and not really have a lot of credit risk in your face. So those are spots we like here.
Have you changed your allocation? I mean, in terms of U.S. bank, conservative, whatever, anybody, their growthy, their value, whatever. Have you made adjustments, or is it just simply steady as it goes?
Yeah, we've been a little more active, Tom, on the international equity side. I don't say it because, we're cherry picking what's worked.
Weak dollar?
Yeah, weak dollar certainly helped. If you look at, some of the, I guess the key phrase that we use is that things don't have to get materially better. They just have to get marginally better. And Europe is in slightly better footing. The financial services space is in a better spot than it has been. And so that participation, we think, probably continues. So good place to be.
Futures negative 80 right now. Dow futures negative 450 as well. The VIX 23.75, but I don't like the action. We're going to really need to see some market opening VIX dynamics to get a handle on that. It is the market opening. Lagarde still in Q&A in Frankfurt. Here's Lisa Mateo.
Yeah, we've got a lot to consider. We have global bond yields, tariffs, tech earnings, a lot. Let's get to the markets to see the reaction from all this morning. The S&P 500, we'll start there, down 1%, 76 points, 5,765. The Dow down 0.9%, 400 points, 42,600. And then we go to the NASDAQ, down nearly 2%, 1.88%, 350 points at 18,197. We go to the 2-year yield, 3.97%. That's down 3 basis points, and the yield on the 10-year 4.28%, and that is little change. Want to point out spot gold lower this morning, $2,909 an ounce. Brent crude higher, $69 a barrel. WTI crude $66 a barrel. We go to the Bloomberg dollar spot index, down about 0.2%, and the euro up 0.3% at 108.22 against a dollar. We have Bitcoin down 0.3%, just over 90,000, and at the open, Marvell Technologies down 18%. That is your opening bell report. Paul and Tom.
Thanks so much, Lisa. Greatly appreciate that. Eric Friedman with us, Chief Investment Officer for U.S. Bank Asset Management. This is a really important question, and I still don't have a straight answer. Are tariff dynamics within equity sectors narrow within a sector or sector to sector, or are there parts that are removed from the tariff debate, like Mag 7?
Yeah, I think that the biggest, straightest answer I can give, Tom, is if there are substitutions available within, for example, consumer products, that would be an area where we think that there's probably a little more of a wider range of outcomes, if you will. Meaning that if I can substitute good A for good B that is tariff, then that's obviously achievable. I think that if you get into the scarcer parts of technology, the scarcer parts of higher end retail, that's a space where we do think that the consumer will bear the majority of that cost. And that for us is really key variable. We score consumers anywhere from a 0 to a 10 on an aggregate basis. They were as high as an 8 about 24, 36 months ago. They were actually at about a 5 in our book right now. And that suggests that there's this cumulative impact of slowdown, which is starting to take a toll. If you layer on top of that additional cost, someone will bear that cost. Either it's lower profit margins, which obviously hurt corporate earnings, or that's passed on to the consumer, who, again, is already feeling the weight of higher shelter costs, higher transportation costs, and food costs. So that cost has to be borne. We think that, again, on a more pan-sector basis, consumers will feel more of it than is probably in markets right now.
So does that suggest this gives the Fed perhaps more room to cut rates this year?
Yeah, I think the Fed, I think they have a little room. I would say when I say little room, I mean they're still anchored on that UMich data from the last 2 months, where consumers are expecting a 4% inflationary environment out, beyond 2 or 3 years. That is not Fed friendly. That becomes embedded. That's when people start asking for raises. That's when people expect, companies to have their SG&A expense, obviously pass on to consumers. So the bottom line is this: we think that the Fed has some level of room, but if that embedded psychological, nexus continues, they don't have as much room as perhaps the 2.5 cuts suggest.
Tom, did you know that Eric lives in Chapel Hill, North Carolina?
So you're flying back for the game tonight?
I might. The Cooper Flag Express.
There will be a game in Chapel Hill Saturday night at 6:30.
It's Saturday night.
Yeah, 6:30. So
and the U.S. Bank seats are just to die for.
To die for. Exactly.
I mean,
he's right under. He's center court.
It's it's like we call that better than Rubenstein at Duke.
Yeah,
he's front row. David's front row. At Duke.
I had for 2 years, third row right in.
I know. I've seen your photos. You're there.
I should have stayed there and got my PhD.
To be honest, Eric, I mean, we had Texas A&M take out Auburn. I mean, they've won 6 in a row. I mean, Paul, I would not be sleeping on this.
That's right. You can't sleep on mighty Colgate either. This is the time of the season where we start to make some noise.
That's right, the Colgate.
The noise in Lake Moraine, folks, is the snow melting down from 14 feet deep to 8 feet deep. Good morning, Lake Moraine in upstate New York. Eric Friedman, thank you so much for joining us today. We had negative 500 on the Dow. We are open negative 484 on the Dow, 1.1%. NASDAQ down 1.9%. We will continue here. An exceptional morning. Paul Sweeney, Alex Steele. Look for that at the 10 a.m. hour. On YouTube, subscribe to Bloomberg Podcasts. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a sell-off in technology shares dragging down the equity market. Right now, we'll start with the NASDAQ down more than 1.5%, 309 points. The S&P 500 down nearly 1.5%, and the Dow up. Dow down just more than 1%. And if we take a bigger look at this, we go to the IMAP feature of your terminal. Of the 11 major industry groups, the biggest drag coming from, and you click through, consumer discretionary, automobiles components, and then automobile manufacturers. At the top is Tesla down more than 4.5%, followed by GM down 3%, Ford down 1.5%. As you know, those automakers really taking a hit after the White House delayed levies on them. We go to the 2-year yield, 3.96%. Down 4 basis points. The yield on the 10-year, 4.28%. That is little change. The Bloomberg Dollar Spot Index down about 0.2%. Economic data. Jobless claims fell last week. That comes ahead of tomorrow's jobs report. And then we go to earnings. We have Macy's shares down nearly 3%. It had a downbeat annual outlook for sales and profit. And finally, Kroger. They gave a bullish sales guidance. Its shares up 5%. That is your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Appreciate it. Lisa, this morning. Now a 4-hour conversation with Henrietta Treyz. She's been so kind to be with us on like a 3-day basis here with Veda Partners. Henrietta, I actually do have a countdown clock going. For the first time, we're 8 days away from March 14th. Within the halls of Congress, Democrats and Republicans buffeted by the cacophony of news. What's the path you see to, I believe it's March 14th at midnight?
It is March 14th at midnight, but on the House side, it's really March 12th because they are going on recess on that day. So what it looks to me like is the House Republican Conference and the Senate Republicans are really trying to jam Democrats here by putting a bill out at the last minute that they will not support on the House side, but then Senate Democrats would be forced to support and vote for sometime midweek next week around the 11th or 12th. So they're really cutting it down to the wire. And we've increased our odds from 20% to 25% that we might see a shutdown next week as a result.
Okay. So they shut down. And let's say since they're on recess, they shut down for Friday, Saturday, Sunday. OMG, Monday morning, they reopen. Is that the scenario here, Henrietta?
Nope. They're also on recess the next week. So it would be a shutdown of, at a minimum.
Well, does an adult in the room say, hey, everybody, unrecess and get back to work? Has that ever happened?
I'm sure it has happened in history, but it's not something that usually does occur. That's sort of why my odds are relatively low that we see a shutdown, is because they usually develop a last-minute solution. But as for strategy right now, Republicans are not in the room with Democrats. They are in the room with themselves, trying to jam Democrats. And that's going to come into a math problem when we get over to the Senate and they need 7 Democratic votes to keep the government open. So it's sort of the run up to the 11th hour right now.
What have we heard from the White House in this whole process here?
The White House, and by that I mean Elon Musk, who was with House Republicans yesterday and really trying to figure out how to get the DOGE cuts implemented into any kind of permanency. You know, we're seeing cuts across all kinds of agencies. Trump is planning to announce he's shuttering the Department of Education later on today, as I think y'all reported. You know, they're working just with Republicans and really enjoying this situation where Democrats are just being whipsawed back and forth with no clear direction on how to combat them.
So talk to us about, you've mentioned in the past, Henrietta, about the Democrats in this budget process may be the time when they can actually step up and be heard here, because it seems like President Trump and to a lesser extent Elon Musk take all the oxygen out of the room. Is this an opportunity for the Democrats to step up and assert some leadership, or at least their position?
It's definitely an opportunity, but as yet they do not have a clear and unified path forward. So right now their ire is all focused on DOGE, and it seems like the main concessions they're asking for is cuts to DOGE. But as we saw in the wake of the State of the Union address earlier this week, the Republican voter base really supports the idea of DOGE, even if they don't support the actual cuts that are coming. So Democrats are having a hard time coalescing around how exactly to rein DOGE in and get the voters behind it. They don't like the cuts, but they haven't identified, you know, a clear flag that they can wave that can get Trump to move off his position.
In all your Henrietta Treyz brilliance, I mean, you said, I believe, the Senate, 7 Democrats have to vote with the Republicans. Is that what you said?
Yep, but this has to get 60 votes in the Senate
Why
side.
would they? Why would any Democrat now vote with the Republicans?
I completely agree with that assessment. The question is whether they can stomach shutting the government down. And the way that Trump is going into this.
But to be cynical about it, isn't that what 1600 Pennsylvania Avenue ultimately would like?
Exactly. And so this is sort of playing right into Trump's hands. Democrats' threat is to say, if you don't negotiate with us, we will shut it down. And Trump's effectively saying, and so I don't care.
Jeez, that's where we are. Hey, let's just switch gears a little bit. Henrietta, Veda Partners, you guys have a tariff odds tracker. A, what is it? And B, what's it telling you these days?
Oh, sure. You know, our clients are all hedge funds, and they want the, you know, quick and dirty of how things are working and what we're expecting. Everybody's just trying to wrap their arms around the realm of the possible. And so when we put our odds tracker out, we cover a whole host of different components. Odds of tariffs on China, you know, virtually 100%. Obviously, those are going into effect. We're at 20% now. Odds on Canada versus Mexico are slightly lower. I think the odds of EU auto tariffs have been and continue to be very high, and I want that to be really clear cut every time we talk to clients. You know, EU auto tariffs, I think, are coming. There's a perfect catalyst for that on April 1st. The March 31st deal that Ambassador Tai negotiated with the EU and the under the Biden administration expires on March 31st. So April 1st is the date that Trump used in his America First trade agenda, and it's not coincidental. It's exactly in line with the expiration there. So our odds tracker really just tries to get to the heart of the matter. Tariffs are coming. They are in place. There might be some staggered effects, but they are coming.
Henrietta, thank you so much. Just treasure the frequent visits. Henrietta Treyz, expert on all this with Veda Partners. Right to it, down -500 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Trump is preparing to sign an executive order today that would instruct Education Secretary Linda McMahon to begin dismantling her agency. It will likely set the stage for a clash with Congress and more legal challenges from opponents. The American Federation of Teachers said in a statement last night that the Education Department was legally required to distribute federal federal funds approved for poor students and those with disabilities. Elon Musk came to Capitol Hill to meet with Republican members of Congress to shore up support for the Department of Government Efficiency's budget slashing methods, including job cuts. Musk spoke to reporters after the meeting.
Mr. Musk, what was your message in there to House Republicans? What was your message in there, Mr. Musk?
There's a lot of opportunity to improve expenditures in the government.
Republicans on Capitol Hill are warning Musk to run his government cost cuts by them first if he wants them to hold up in court. Bloomberg's David Gura.
A lot of these cuts have come quite quickly and without much notice and have left people in the lurch. As this kind of spreads beyond just Washington, D.C. and the Beltway to other parts of the country, lawmakers are acutely aware that there needs to just be more explanation of what's happening here and some indication this is being done in kind of a smarter way.
Bloomberg's David Gura. 6 people have been killed in 2 states in a powerful March storm as the severe weather system moved across the U.S., bringing blizzards to the Great Plains and high winds to the south. Today, residents in Omaha, Nebraska are digging out. This Omaha resident shoveling his driveway says he felt the storm overnight.
It's pretty wild how it's just rain to snow to just the wind and everything. It just seemed like it was shaking the house constantly all night.
More than 100 million people were under high wind advisories. A joint military exercise went wrong in South Korea. Seoul and U.S. forces were holding joint live fire exercises linked to annual drills that start next week. Dozens of people injured after a pair of fighter jets accidentally dropped 8 bombs in a civilian district. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael, thanks so much. Special coverage here for you right now with markets deteriorating. Negative 550 on the Dow. There is a weight to the tape. I've got a negative 1.8% on the NASDAQ, and finally out to over 2 big figures on the VIX. Paul, the VIX moves finally 24.37, not to 25.
No, exactly right, Tom. So we're seeing across the board selling here. We've got the S&P kind of off, about 6-7% from its high earlier last month. So it is a noticeable pullback here, Tom, in the marketplace. And I guess what we've heard from a lot of our guests is markets don't like uncertainty. We've heard that before, and that seems to be playing out.
Banks 2.5% move on a blended basis of the big banks. Joining us now, Gino Martin Adams of Bloomberg Intelligence. Too quickly here on these equity markets. Are you back to single-digit growth earnings estimates because of the festivities in Washington?
We're getting close. Well, I think the consensus
movable
for analysts, the part of the problem is that fourth quarter was so good, it makes the comp tougher. So you have to actually pay attention when you're looking at growth numbers. That is having a real impact. But what we're looking at right now is growth probably accelerated about 10% in 2024. In 2025, the consensus is around 10% now. They were at 13% prior to the fourth quarter earnings season. A lot of the downward revision momentum has emerged because fourth quarter was so good. We have not yet seen a tremendous amount of capitulation from the analyst community. And I think that's important to consider is we probably will end up closer to 8 or 9% growth by the time analyst estimates finish accounting for what's going on with growth.
Because we're hearing it, I mean, we haven't seen it necessarily from company commentary, although a couple packaged goods companies have called out this uncertainty is not good for our consumer. And we're starting to see it a little bit. So I'm starting to hear a little bit on the margin some of these managements talk about it. And that's what I think maybe is being reflected in this market.
Yeah, it is interesting because it's happening on the margin. And you rightfully bring this up because it's hard to imagine considering the macro headlines that we've been dealing with in the market over the last 3 weeks or so. But throughout earnings season, we actually saw company sentiment improve relative to the third quarter. So what we detected in the actual earnings analysis that we do of transcripts really didn't give us a whole lot of indication that companies are concerned. They're starting to get concerned now. I think that initial round of tariffs that was delayed for a month gave them a little bit of false hope that tariffs would not happen. And now we're starting to see some real downside effects.
On the income statement, given the originality, starting with Lagarde in Germany today, I mean, on and on. But on an income statement basis, where's the biggest risk for a CFO? Revenue dynamics, fancy EBITDA dynamics, or is it down at the bottom line?
It's such a good question
It's
because
my only
right
good.
now,
I don't have a good question for
Thank you, Tom. Right now, that question has to be answered at the sector level, because I think tech gives you one view and the rest of the index gives you another view. Tech is a unique animal. Last year, the risk was all about margin. It was very clearly, oh, maybe we're not going to make quite as much margin as we were anticipating. We're going to have to spend a little bit more. Now the question is about revenue growth. This is something that did emerge in the fourth quarter earnings season as we started to see analysts' forecasts for revenue growth for tech take a little bit of a hit. Companies guide for slightly less optimistic revenue outcomes. So tech is a unique entity. The rest of the index is not as much a revenue story. The revenues already were relatively limited. So it's more a mix.
Get one more in here. She has to go downstairs. For those of you that don't know this, it's like Raiders of the Lost Ark at the end when they take the thing, the ark, you know, into the bottom. I mean, it's like 300 people on a floor with wood burning and coal burning stoves. It's like Victorian England.
Bloomberg Intelligence. So talk to us about inflation and pricing power. I think during the 21-22 inflationary period, I thought American companies and companies in general did a good job passing costs along to consumers. Can they do that again if there's tariff-induced cost increases?
It looks increasingly less likely that they'll be able to pass all the costs on. And they did a decent job in 21-22. They didn't pass it all on. They actually did take a bit of a margin hit in that experience, and that created a downdraft in earnings. I think that over the course of this year, we're going to experiment with that kind of climate again in a different way. We're obviously not seeing a massive acceleration in commodity costs. Oil prices are indeed pretty contained. But what we are seeing is tariff-induced acceleration in input costs. And that's really difficult for companies to pass on to a consumer that is already struggling to maintain their pace of spending. It's next to impossible to pass on to a consumer that is truly struggling because employment conditions are falling. And this gets to what are we going to see tomorrow on the employment report, because this is incredibly consequential.
Good. You get a blue star for that.
Incredibly consequential to markets.
Jobs report tomorrow at 8:30. Gina Martin Adams will be with us on that, no doubt, as well. Gina, thank you so much. Down -500. Janet Lauren with us, and what you need to know is she's the most important person in Bloomberg. She's the most important person in Bloomberg because people will go, how do I get my kid into, name the school? Janet's in charge of all of our looking at the collegiate process. On the big take, you just looked at not just Harvard, but with Supreme Court rulings, the new mix post-DEI, post-diversity. Is there a tangible change in our universities after DEI?
Well, we looked at Harvard Law School admissions 1 year later, and the pipeline for Black first-year law students has really shrunk. They have 19 students who started this fall, down from 43 last year.
Wow.
And yes, the Supreme Court decision had an immediate effect there. And when you talk to students, Black students there, they are really intent on trying to make sure that it's a 1 year blip. And they've been doing a lot of recruiting. They've been helping potential applicants, reading applications. They've been going out to college fairs. And they've been, Harvard is a little afraid of what's going on right now themselves.
You are the guru on this. You and I could go literally for 5 hours on the madness of American education. When somebody applies to Harvard Law or Duke MBA, do they know what color their skin is?
They do not look at boxes anymore. Race is not considered in the application. However, there's the question about essays, and you are allowed to write about your life experience in an essay. Justice John Roberts, said that after the ruling in June 2023.
So, what is the expectation on part of these schools? Is this really going to be a longer-term trend, or again, as you suggested, maybe a blip?
The question is, we don't know. And other law schools the top law schools didn't see the same kind of change that Harvard did.
Interesting.
Now, keep in mind, Harvard is more than double the size of most of its elite peers. It's about 560 students. Stanford and Yale, for example, have 200 students. They're much smaller.
Right.
So, a bigger drop is going to be more apparent in the numbers. But if you're, sitting in a section of Harvard Law School about 80 students and you're just a few Black students, you really feel it.
I got one general question, Janet Lauren. We got to have you on, more like, I'm thinking, Janet, every 10 days.
I'll do it.
Wander
The Department
out here.
of Education.
We got to talk to you. COVID messed up college admissions. I've heard this from everybody anecdotally. Are we back to a year of normal admissions processes, or are you and your team still seeing college admission bedlam across America?
Well, it depends on which college. The elite colleges are back to the SAT and ACT again. Not everyone else has
MIT
followed.
leading the charge on that.
Yes. Well, you really have to do the math at MIT, otherwise you're not going to be successful. So they were, they said this a few years ago, and then everyone followed about a year ago. But it's not clear what's going on in terms of SAT. Some are still optional, and what does it really mean, optional?
Right. It's like 30 seconds. Is everybody moving to Europe? Everybody's saying, that's it, I'm getting out of America?
Well,
Alex Steele and her cherubs, they're going to be over at Munich or someplace?
Well, it might be a better price tag. You know what the price tag of a year at an elite college is?
I just looked yesterday.
$90,000+ for 1 year.
How many people at that school pay $91,000?
30, 40, 50%.
I agree.
You can't ignore it. You can't just say nobody pays that and move on.
Is it like Marlboro cigarettes? They've reached a peak where people just laugh and say no?
It's hard to tell. It's really hard to tell if the colleges understand what's coming for them.
Can you come by more often?
I would love to.
I mean, she has handlers just to talk to Janet
just
Lauren.
to get into the.
It's like, it's like impossible.
Yep.
Janet Lauren, thank you so much. A big take here on the Supreme Court and graduate law school admissions. The Dow, negative 536. Alex Steele has darkened the door to move forward. Markets on the move.
New York snow. She got Betty down.